They fail to realize that they didn't need any of the stuff that was below the price. All they really need is the price. Some people may not believe me when I say that, and that's what I'm hoping that we can accomplish by showing this session. So this session will be on reversal patterns, and next week I intend to do continuation or trend trading patterns. So let's get started. I'm just going to reset that chart with a million things on it and load my regular. There we go. And here's my regular. Left side is daily chart, right side is a 15-minute chart. I'll just put that away for a minute. Okay. So let's start with different types of trading patterns, reversal patterns. The first one is a single bottom or single top. I have a touch screen, so hopefully you guys can see this in real time and it'll look good. We're gonna just make sure we have our pen here. Use red. What does a single bottom look like? That is what a single bottom looks like. You got a bottom here. Draw that a little bit like that. You see that single bottom. What happens on single bottoms? Well, most people think, oh, I've got a bottom, therefore I can buy here, and it's, you know, it's just going to shoot up to the moon. The reality is that is not the case. What will usually happen is this. Right? And if I was to draw a single top, do it like this, and it keeps going. Okay, so single bottoms fail 64% of the time. Now, throughout this little series that I've done, I will relate some statistics. Those of you who are trading single bottoms, if you're looking at the price, if you're looking at the price only, or even if you're combining it with some sort of indicator, 64% of the time, it's going to do this. It's going to fail. We need to understand that, because what you're really saying is 2/3 of the time, I'm going to lose. If you went to Las Vegas and you sat up on a table, whatever card table or whatever game you wanted to choose, and the person said, welcome. By the way, you're going to lose 2 times out of every 3. How long would you stay? Maybe you might stay a little bit more than most people would probably not stay at all. They would leave and say, look, the odds are not in my favor for me to win. I'm not going to do this, and therefore I'm leaving. That is exactly what you do when you buy a single bottom on a price chart. You're literally saying, I'm willing to fail 2/3 of the time. That's what I'm going to do. And when I buy a single top and I short it and I buy puts at a single top, 2/3 of the time, 64%, I'm going to lose. So, what does that mean then for all of you? Is that hopefully after this, you guys will never, ever, 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 ever buy a single bottom. You will never, ever buy a single top. If you at least look for some sort of price pattern, and this includes even those who are doing trend trading or continuation trading, if you at least look for some sort of pattern that doesn't include a single bottom, you guys have a much better chance of success. So, if that's the case, and a single bottom fails, well, it works. So we'll go and clear this. You know, a lot of people will say, okay, I'm waiting for a double bottom. That's the next major thing. And then I see what ends up happening is this. So you get the price coming down, it does a bottom, and then it comes up, and then it comes down, and they go, oh yeah, look, I have a single bottom. Isn't that awesome? Look at that little dinky little thing that's just peaked above, and yeah, I got a single bottom. I rule, and away we go. This is going to fail. Okay? If you're looking for some sort of bottom and you're doing this and you're waiting and you just buy that little peak up, there's a strong chance you are going to fail on that trade, because more than likely what will happen, again, odds say it will more likely do this. That little stop, that little drop went up, will do that. Similarly, I'll make sure that you guys have it on both ways. If I'm doing a top and I got a top and it comes down and it does another top, and then, oh, if you buy there, where it is, you have a strong chance that it's going to just do this and keep going, and you're going to be at a loss. But we don't want to do that. So what is the qualifications then for a double top or a double bottom? Well, first thing you want to do is you need to make sure you have a top. Okay, so there's a top. Or if I'm doing a bottom, I have a bottom. Then I need a peak up, and I need another peak down. Okay. First thing I want to do, draw a line across here. Let's draw a line across there. First thing you're going to need is for it to go above this level. In this case, below this level. That is when you truly have in this case, a double top on the left and a single bottom or double bottom on the right. You need that price. So again, I'll just draw that to make it a little clearer. Maybe I should use a different pen. So you have green coming up, it comes down, it comes back up, it comes down, and let's just use blue. It goes below. That's the first criteria for making sure you have a double top. Likewise, you have a falling, it makes a single bottom, comes back down, goes back up, goes above that peak, now have a double bottom. There's another thing that's to make sure it qualifies really truly for a double top or double bottom, and that is it closes. You need it not only to go below in the case of a double top, or go above in the case of a double bottom, you need it to actually close. And what does that mean? You don't mean necessarily closing in a daily chart, because you could be on a 15-minute chart. You need that 15-minute bar to close below on a double top and close above the blue line on a double bottom. It could be a 5-minute chart. It could be a 1-minute chart. It could be an hour chart. It could be a daily chart. It could be a weekly chart, a monthly chart. It doesn't really matter. If you want to have the pattern confirmed, okay, this is what we're talking about. Confirmed. Okay? Sure, it may look like a double top. It may look like a double bottom. But for it to be confirmed, it needs to, 1, go above the blue line, so break the blue line, and 2, close. Close above the blue line in the case of the double bottom, close below the blue line in the case of a double top. That is when you truly have a confirmed pattern. So the little guys that you see that just bounce a little bit off and say, oh, that must be a double bottom or a double top, those are not truly confirmed patterns. So what that really then means is a lot of times we have to wait. We have to be patient. That's usually the biggest or one of the hardest things for traders to learn is patience. Because they jump in and they're going, okay, I've got that double top. I'm gonna be awesome. I'm gonna short it here. I'm gonna buy puts, and they didn't wait. They weren't patient. And it turns on them and it goes the other way, and then they end up losing their entire trade if they're buying options usually. Okay, so there's your two two criteria that you need in order to ensure you have a double bottom or double top. Now, some statistics that you might want to be interested in. You know that and it goes above on a double bottom, use a different pen. I'll use blue. 89% of the time, when it goes above, it keeps going. You know what? Let me just clear this, do it again, just so that we're clear. So, double bottom, 89% of the time, it keeps going. This is why this pattern is very, very good. Because if you wait and are patient to make sure that you actually got a confirmed double bottom, 89% of the time, you're going to make money, some form of money, because it's going to keep on going. A strong statistic that you should know and be aware of. Now, what about double tops? Well, double tops, again, this. 93% of the time, it keeps going. So in fact, a double top is stronger than a double bottom. Now, it's not that much of a difference because when you take 89, you take 93, you get an average of 91% of the time. 91% of the time, a breakout of a double top or double bottom in the direction that you want it will go your way. This is why price then becomes very, very powerful, because if all you're doing is you're waiting, you say, well, if I only use a single bottom, I'm going to lose 64% of the time. If I wait for a double bottom or a double top, I'm going to win 91% of the time. Why the hell would I not do that? Even if I have some fancy indicator and whatever, it doesn't really matter. At least wait for the price to confirm, have the patience to wait for that. Miss out on maybe on some of the move. Perhaps you don't get as big of a move as you wanted to, but at least you have a strong chance of winning. Now there is one caveat. There's one caveat, and I will draw that for you so that you can see. What happens when you get one of these? So the price comes down and it does one of these. Or price, whatever, pick green. This comes up and it does one of these. These are likely to fail. These are tall double bottoms. Yep, it's a double bottom. You know, Big T said it's a double bottom 91% of the time, or 89% of the time. It's going to be successful when it breaks above here. The reality is, where the price came from, there's only this small little amount here for it to go. Hey, this little amount there is all you can get out of the trade because it's done this massive double bottom or double top. Same way on this one here. So came from here, right? And from there, it did this double top up here. Now moved down and did this massive double top. Now you only have this little bit of space for the price to move because you've got support down here. Right? This massive double bottom and double top is not a trade you should take. You shouldn't take this one because very minimal profit to be made, and more than likely it's going to reverse, come right back up. Does that make sense? I hope so. So as far as question and answers go, I thought I would go through a couple of these, and then before we get into any questions, I did mention I'd probably do questions at the end. Let's just do a couple more, and then maybe I will open up to questions, and then I'll do the next set specifically on them. So the next version, so just so we let's go to here. So here's the different bottoms, the reversal patterns we're going to touch. And I mentioned, first of all, the single bottom and top fails 64% of the time. The key here to understand is the more touches you get, the stronger the pattern. Therefore, a double top or double bottom has multiple touches. It is likely to be a stronger pattern, and it is a stronger pattern than a single bottom. Also, if it goes in, if these bottoms are in the same direction, it's also going to be a stronger pattern. And you will see that as we go through the various patterns that I'm going to go through. There's 10 of them there that I mentioned. So just looking at, again, double bottom and double top, I have a little picture. You guys, if when you're watching this video, if you want to rewatch it, you can be able to pause it on there and take some notes. But the lines are drawn basically in the same spot that I was drawing them. You need to break that blue line. And when you break that blue line, that is when you have confirmation of a double bottom and double top. Next one on the list, you go back, is what we call a 1, 2, 3 double bottom, double top. So what is a 1, 2, 3 double bottom or double top? So let's draw that. Back to here. I also have a picture, by the way. So in case you don't want to draw what I'm drawing, you can see the picture and stop the recording as well. So a 1, 2, 3 bottom is this. It comes down, it does a bottom. It bounces up. So far, it looks like a double bottom potentially could be made. Then it comes down. It doesn't go all the way. It does one of these. Most of the time when that happens, you see this sort of pattern. And you'll hear people talk about it in the Discord. Look, it's got rising bottoms and rising tops. Okay? That is the 1, 2, 3 pattern. And you have the same in reverse for tops. Canvas, use red. The tops comes up, comes down, goes slightly, not as much, not as much. Okay. This is the 1, 2, 3 top pattern. Where do you buy and where do you confirm? Again, similar to a double bottom, the confirmation is on the line. Okay, we can draw that a different color just to make it clear. This is the this here is the 1 point, here is the 2 point, here is the 3 point. In order to have a confirmation of a double bottom or double top, you need it to break 2 point. Similarly, I will draw a double bottom down here. This is 3, this is 2, this is 1. Use a different color. It needs to break the green line, and then you have a double bottom, 1, 2, 3 double bottom breakout. You have confirmation. Because, as we said before, and we'll just re-emphasize it for everyone, you can end up doing this, thinking, oh, I got 1, 2, 3, right? That's what we think on a double bottom, potentially, this little tick up. Oh, I got a 1, 2, 3 forming, everything's good. And then what ends up happening, this is what ends up happening. Okay? That is why you need to have it above. That is how you have confirmed it. Without that, you don't have confirmation. You could end up having this scenario where it slightly moves up and then tanks on you. The same in reverse. In reverse, comes up, comes down. Oh, I've got a 1, 2, 3 top, and then up it goes. And it screws you up because you didn't wait. You didn't confirm. So when we go back to our little presentation here, we can see that we're entering on the break of the 2. Makes a bottom, goes up to the 2, and makes a higher bottom on a 1, 2, 3 bottom, and then it comes up, it breaks above, and now I know I have a 1, 2, 3 breakout, bottom confirmed. Similarly, on the top, It's a top, comes down, goes up, doesn't go as high, comes back down, breaks through number 2. Now you've entered. That's where you enter, right here. Okay. I will point out again, it's not just a matter of breaking down or breaking through. Just like double bottoms, you want to see, I'll draw it here, let's clear this canvas again. You want to see it come up, you want to see it break out, and you want to see it close above. And that close could be, again, it's based on your time frame. If you're using 15-minute charts, you want to see the 15-minute bar close above 0.2. Right? Not just go above, but close above. That is how you truly know that it's confirmed. Let's see. Now, one other thing I want to point out for everyone's benefit is this. So you get a 1, 2, 3, comes above, closes above, and it does this, as I mentioned earlier. This here, this point, this point, this point, this point, and this point, all of those can be used for stops. Oftentimes I get asked, where can I trail my stop? So you got in over here. Okay, this is where you got in. Waited for the close above. You have the 1, 2, 3. Your first stop is here, stop 1. Goes above, keeps going higher, comes back down, does this again. I move my stop up to here. This is stop 2. Move it again to stop 3, stop 4, stop 5. Okay. That's how you can trail your stops. If you've got a chart that's doing these kind of higher highs and higher lows pattern, you can continue to trail your stops to these points. Of course, that's a lot easier to do with shares, because shares you can actually use that point and the price. The options, you're going to have to sort of understand roughly where was the option at that point. Depending on the time value that's gone through, you may have to adjust for that. If it's been a day trade, obviously it'll be easier. If it's been a trade you've been holding for a couple of weeks, it'll be harder to trail those stops. But you can, in some platforms, for instance, Thinkorswim, you can set up a stop based on the price. If it goes below a certain price, you can trade the option instead. Similarly, on a 1, 2, 3 top, and it's doing the same pattern, you can trail your stops on your puts. Okay, so it comes up, it comes down, does this. You can put your stop initially here. Your breakout, you didn't enter till here. This is where you entered. First stop is the first green line, then you trail it to here, then you trail it to here, then you trail it to here, you trail it to here. And then when it does bottom and goes through, you get stopped out here, and you also go along on your calls there at the same time. So you can manage the trade that way if you like. One easy way to manage your trade as you're going through it. I will do the next one before we go into questions for the first 3. So we've already done this one. So now the next one, I'll just go back to my list. The first one was a double bottom and top. Second one was the 1, 2, 3 double bottom and top to triple bottom and top. Now it might seem like it's pretty straightforward, and for the most part it is, but there is a couple of nuances that you want to take note of, right? So first of all, what is a triple bottom? Well, let's just make it simple. Triple bottom is it's a triple bottom. Where do you buy triple bottom? What confirms it? Same thing as the double bottom. It's to go above these peaks. Sometimes the second peak is a little less than the first peak, and sometimes it looks like this. Okay. Generally, the concept that you're trying to do is you might have bought here or you might do there. It depends on how you want to trade it, but generally speaking, that is where buys would happen, either here or here. Some people like to really wait and make sure. Others will get in on the first line. There is what a triple bottom looks like. Similarly, in a triple top, it's the reverse. I will just draw that just for everyone and the video purposes. See it? The triple top looks like this. Right? There's a triple top. Now, there is a couple things that you want to be aware of. First of all, similarly to what I mentioned on a double bottom, same applies for triple bottom and triple top. And that is, if you get stock that looks like this, you don't want to trade these because, again, there's only this little bit of space. It's moved way too much up and down. The up and down movement on this triple top, and if someone's looking at this, might even think it's a triple bottom. The movement between the two lines is too large. So you want to generally avoid those, because if you're able to trade it for some other method using some other indicator, and maybe you got in here and you could trade it down to there, and maybe you got in there, you could trade it down to there, etc., etc. But generally speaking, if you get very big M's, okay, like that, you don't want to trade it. And if we reverse it again for the bottoms are the same thing. You do not want to trade these large things that look like that. That would be your triple bottom. Right? Because the breakout is only going to be this little piece. It's not worth your time. Okay. The other thing that you should know about triple bottoms and triple tops is an interesting little fact. I have to draw it in order for you to see it. A triple bottom looks like this. And a triple top looks like this. I'm going to draw a number in between. 84%. 84% of the time, a triple bottom or triple top will pull back. And what does that mean? Well, let's draw that. It will pull back. Do this. Or it'll pull back. Do this. 84% of the time, triple bottom or triple top will pull back. What does that mean? It means that generally speaking, if you want, and most people who trade these will, is they'll wait for the pullback. Sometimes that pullback looks more like, let's do it on the tops. It looks more like this. And what they'll do is, instead of buying here, they'll buy here. Maybe draw a different color. Instead of buying here, end up buying here, because 84% of the time, you know it's going to pull back up and then tank. Right, so they're going to try to get a better price and a better confirmation. This is the move to take. It's an interesting little fact most people don't realize, and a lot of people just buy that bottom and they're trying to buy right down here or sell right down there. If you wait for the pullback, you will be more successful. And I bring that up because, again, this is really highlighting a key that I stress it a lot in the chat. I will stress it a lot tonight. But you need to have patience. Everyone needs to learn to have patience. Too many people are trading and getting in too soon, and they're not having patience. As a result, they end up with very bad fills. They end up getting in way too soon. And it is always, 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 always better to be late and be right than to be early and be wrong. That I can't stress that enough. I'd rather miss the move entirely, even if I'm a breakout trader. Even if you're one of those, you're an active day trader, you're trading breakouts, you're not even trading reversal patterns. Even if I was one of those, I still rather miss the move, be right, and have patience than to try to preempt the move thinking that it's happened only to get ruined as it goes against me. I can't stress that enough. So please, if for those of you who are newer at this, we understand a lot of the people who've been doing this for a long time are still struggling with patience. It's not easy, and still, even when you have 25 years experience, every once in a while you get in too early. So I can't stress it enough. Keep working on your patience, keep waiting. You're better to be wrong, or sorry, you're better to wait and be right than to be wrong and be early. So that covers our first three patterns: double bottoms, 1, 2, 3 bottom, which is similar to the double bottom, and the triple bottom. Before I go into channels, let's take a few questions. And I don't know where all the questions are, so I'm going to rely on our mod, Tommy, and I rely on Moonshot to help me out with questions if there are any. I can't not see the Twitch, so I don't know if any questions were posed there. Do we have any questions, guys? Do we know? I'm getting a few people messaging me personally, but I haven't read them. Go ahead.
Well, they're kind of all over the place, so I'm trying to find.
That's fine. That's fine.
Where they're mostly consolidated. IR455 asked that he read that for 1, 2, 3 patterns, the deeper the retracement, the lower the probability of a reversal. And I guess he just wants to know if that's true or false.
So you're saying on this that here's the 1, 2, 3 bottom, that the farther this goes down towards number one, more likely it will fail? Does that sound like the question?
Yeah, more likely that the reversal will fail.
Yeah, I don't agree. And the reason why I don't agree is because of this pattern, the double bottom, double top. Double bottom, double top effectively is a 1, 2, 3 that went all the way down. Right? Mm-hmm. So, I mean, in the end of the day, it's a double bottom, double top, and a 1, 2, 3 bottom and a 1, 2, 3 top are effectively the exact same thing. The only difference is how far down it went. This pattern is stronger. I'll go back to my list. I've listed these in strength, in level of strength. For in other words, a double bottom is the weakest of the first 7. Now, 8, 9, and 10 are sort of nuances, and we'll get into those. The first 7 are listed in order of strength. For example, a triple bottom is stronger than a double bottom. 1, 2, 3 double bottom is stronger than a double bottom. The head and shoulders bottom is stronger, or which is an inverse. That is stronger than a triple bottom, which is stronger than a double bottom. Right? A cup is stronger than a channel and is stronger than a triple bottom. They've been listed in order. Right? So in a weird way, what IR is saying is true. Because if the 1, 2, 3 bottom comes down closer to a double bottom, it is a weaker pattern in theory to a double bottom. It does not necessarily mean it's weak, but I see where he's going with this question. Because in theory, yes, the double bottom is slightly weaker than a 1, 2, 3 double bottom. Does that answer the question? I think it does.
Yeah, yeah. I think that's That's a pretty good explanation.
Okay. Next question.
All right, red to green is asking, how do we identify stocks with these patterns? Kind of short. Yeah, this one, not really sure if you have an answer, but you could take a stab at it.
Yeah, it's hard. I mean, I don't think Thinkorswim has a pattern recognition thing, whatever you want to call it, within their chart stuff. It doesn't work very well. It doesn't really recognize them very well. It's hard to find double bottoms and double tops using software or using. I know there are some people who are very, very smart who have come up with pattern recognition type algos or whatever you want to call it. Myself, I've never been successful. Like, I mean, I've done some algos. Obviously, some people see those when I'm on in the Discord. They see what I'm doing, but I've never been able to successfully do pattern recognition. So there's no real nice, easy answer. Of course, I'm willing, if anyone has suggestions how to find them faster, by all means, suggest them, put them in the Discord, and we'll even pin the message. If there's some sort of software out there that finds them better. But for me, no, I mean, for me, it's the way I do it. I'm old school. I'm 46 years old. I just scroll through a bunch of charts and they pop out at me. I can quickly see a double bottom versus a triple bottom or whatever. I don't have any fancy software and I can't give you anything as a suggestion, but I'm willing to take suggestions.
All right, a few more questions. Zion is asking, is there a way to calculate the length of breakout in a 1, 2, 3 pattern?
The length of, oh yeah, okay, so we're going to get into that a little bit. Just go back to the agenda. So after I'm done all the patterns, we're going to go into the targets. How far can this thing go?
Oh, gotcha.
Right, so they're in a lot of the cases, they're sort of an interval target and a higher target. Not all of them have the greatest targets. Some of them are easier or better than others, but we will get into targets. So what I wanted to do is go through all the different patterns first. Then after that, we'll get into some of the targets of each of the different patterns. So
Yeah,
I'll answer that.
Yeah,
later.
yeah, I'm going to skip over the questions that are asking about price targets because that's the majority of them currently. One person, Balarik, is asking if he could have access to the slides after the presentation. This is more of an administrative question.
Yeah, I mean, I can, like, I don't know if there's a way, the best way to post this. It's a Word document. Yeah, sure. We'll post it somehow. We'll figure it out.
Yeah, cool. Here's a good one. Balarik is also asking, these patterns are pertinent on all time charts.
Yes.
And
Yes,
I think he was asking, like, does it, yeah, I think he just wants to know, like, does it work on all time charts?
It does, but always understand, everyone needs to understand this, and I say it all the time. If you're using the 1 minute, the 2 minute, the 3 minute, up to the 5 minute, the relevance of that chart is a lot less than, say, an hour chart or a 4-hour chart or a daily chart. You really don't want, I mean, unless you're day trading, you really don't want to be looking at these chart patterns in a 1 minute chart and say, oh yeah, I've got a double bottom. And that's gonna go to the moon, because you're, at the end of the day, you're looking at a 1 minute chart. And when you go look at that same double bottom on a 15-minute chart, let's say, you saw on a 1 minute chart, it doesn't look like anything other than one line. And the same, if you see a double bottom on a 15-minute chart, you go to a daily chart, there's a good chance that that's not even anything other than a line on the daily chart. So the longer the time frame, the stronger or more relevant the pattern is. It doesn't mean it doesn't work. Yes, you can use a 1 minute chart, see a double bottom, and scalp off of that if you wanted to. If you're trying to use that as a swing trade for 3 weeks, 4 weeks from now on a 1 minute chart, that double bottom means absolutely nothing. Probably going to fail, doesn't work. So the longer the time frame, the stronger or more important the relevance.
Yeah. Here's another good one. JC is asking, should we consider after hours pricing for locating these patterns?
No. That's a simple answer. The only time that after hours pricing, in my opinion, matters is if the stock trades after hours, or sorry, if not the stock, if the security trades after hours, such as the futures. So those matter. The SPYs and the QQQs trade 24 hours a day, so those matter. The only time a stock after hours pattern really matters is when there's an event. If there's earnings and it does a bottom or it does a double bottom with after earnings, there's a chance that that bottom may bounce and keep going back up a bit, at least, maybe even into the next day on the trade. So then you might use after hours patterns, trade them on the price. But if it's not an earnings event, if it's not a major event where it's trading a lot after hours, if you're only getting the occasional trade here and there, just because Grandma Jones in the middle of Timbuktu traded 100 shares and created a double bottom doesn't mean that has any relevance to anything. Right? It's only when there's thousands of shares trading because earnings were good, bad, or whatever. And then yes, the after hours trading matters. Is that it for the questions for now, except for targets?
No, hold on. I think Tommy was going to ask some questions, but I'm not sure where he went.
Okay. All right.
Tommy, are you there? There he is.
Okay. So can you just go on mute for a second because we hear a lot of background noise?
Yeah, I muted him. Yeah, Tommy, your mic is a little staticky and it sounds like you have a fan in the background. But yeah, I muted you for now, sorry.
Oh. I can still hear a lot of noise.
Really? Hold on.
Yeah. All right. Yeah, there he goes. He's muted now. Huh. Yeah, Tommy, whoever asked that, I'm going to get into targets as to what you can use. That'll be after I just go through all the patterns. So I would just ask that anyone who has questions about how far something will go after a pattern and what you can use, we'll save all those questions to the next section. If we've got questions on understanding the various first three patterns, then I'll take those. Otherwise, we'll move on to next set of patterns.
Yeah, I think we can go ahead and move on. And for anybody in the audience, if you have any questions for BigT4X, just go ahead and post them in the questions channel. That way we can consolidate them at the end and then we can do a Q&A.
Yeah, okay, good. So channels. Channels is the next one. Is also the second one that can also be a continuation or a trend pattern. You'll notice I put the little stars or asterisks after patterns that can also be trend patterns that we'll discuss next week. But channels would be the next one. So I'm going to draw a channel. So a channel will kind of look like a triple bottom, or it could look like a quadruple bottom. Effectively, what a channel is it comes down and it does this and that and that and this and whatever, some sort of pattern like that. It's created a channel. That is the next level. Now one of the key criteria for a channel is it must be greater than 15 bars. Okay, and that applies again in all time frames. If you're using a 15-minute chart, if you want to look at a channel, or if you think you have a channel, it should be at least 15 bars or more. If you're looking at a 5-minute, again, same thing, at least 15 bars or 5-minute bars. If it's daily, same thing. That's what determines whether a channel. This is also referred to as a rectangle, and a rectangle only because you put a little thing here, then now you have a rectangle. Okay. You can also get these kinds of things at the end, and they will look somewhat like a flag. I'm just going to clear this one. So you could get something that looks like this. Use the up, and then it does that. Right? And some people will say, well, there you go, I've got a flag. It's a weird looking flag, but you get the concept. The stock moves up, and let's use a different color. It moves up, right? And then goes into this channel. You a lot of times will see these on earnings. I actually talk about it quite a bit. Earnings tend to have this scenario where after a big move after earnings, it tends to stay in a channel for 4 to 8 days. Okay, it's not always the case. It's not 100% rule. I couldn't tell you. Unfortunately, I don't know the odds, but 4 to 8 days generally is after an earnings. So if you get an earnings event, and the stock prior to that was like this and moving up and whatever, and then earnings come out and it opens like this, and you've got this big old gap here. What will end up happening is for about 4 to 8 days, roughly, will form a channel. So sometimes it doesn't know exactly where the top and bottom is, so you kind of have to wait a little bit of time. But it's something you should know, that roughly 4 to 8 days it's going to take after earnings. We'll get a channel before it moves. Let's use green just to make this easier. Before it moves up like this, or in some cases goes down. It happens too. Okay. This would then be the next level. Is a strong. So in other words, again, we're talking about a double bottom, the weakest of them all. We're now on the fourth one. So a channel is stronger than a double bottom. A channel is stronger than a triple bottom. And a channel stronger than a 1, 2, 3 bottom. And why? Because again, we go back to my little Word document here. More touches, stronger the pattern. What does it mean by touches? I'll go back to here. This is a touch, 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 right? The more touches you have on the bottom, stronger the pattern, right? And then also, if the touches are in the same direction, stronger the pattern. So ideally what you want to see, even in a channel, even though it's technically sideways, ideally what you'd like to see is let's draw a little channel over here. What you'd like to see is that the next one be just a little higher, just a little higher, just a little, like it's almost a slight curve. You'd rather see that. Now you will see occasionally this happen, and it almost like starts again the rising pattern. The idea here is the more touches down near the bottom, and if they're moving in your direction, that is ideally what you want. Okay. This here, this channel is one of the strongest patterns, and you see it. And we'll get into targets on this and why it becomes so strong, because once you see the targets on them, you'll understand that how much money you can potentially make on them. Clear that. Next one is head and shoulders, or inverse head and shoulders. Head and shoulders. So head and shoulders looks like this. That's a head and shoulders top. And this is an inverse we talked about earlier. And it has, let's use black. It has a shoulder, a head. Okay, a shoulder, shoulders, a head. This is stronger than a channel, and stronger than triple, and stronger than double. So the more you see of these, the more stronger they are. And in fact, combining the 1, 2, 3, thus even it is a stronger pattern. Now, just I guess the side note to know is that the strongest pattern is what they call a complex head and shoulders, or other people have referred it to as a double head and double shoulders pattern. It is actually the strongest pattern of them all. I don't have it listed in that way on my little Word document. But what is that? So the complex head and shoulders is this. It will look like this. It'll come up and do, it looks like a double top. Then it goes higher, comes down. There's another double top. Comes down. There's 2 more shoulders. Goes down. Okay. This here is what they call a complex head and shoulders. Head and shoulders. Most people they're looking on the market, or if they go on to internet sites, they don't call it that. They call it a double head. Excuse my scribble, but double head and shoulders. Okay. This here is the number 1 strongest pattern you will ever see in a chart. It's because you combine 2, 3 double tops, combine head and shoulders, you combine 1, 2, 3, you've combined quadruple channel, you got a channel over here, you combined everything basically that you can possibly have. Therefore, this is the strongest pattern that you will see. Now, where do you buy a head and shoulders? How do you know that you have a confirmed one? That's important to draw. I'm going to clear this. So you will get a pattern that comes up. I'm just going to draw the single one. It creates what they call the neckline. Here's the shoulder. There's the head. There's the shoulder. I have the neckline. So here's Joe Bob. Here's his head. Here's his shoulder. And here's a shoulder. His neck. Okay, he has a very long neck, but that's not the point. The point is this is the neckline. Where do you trade a head and shoulders pattern? You trade it right here. That is the buy. Buy of the short, or puts, or sell short if you're going to short a stock. But short it when it breaks below the neckline. Similarly, we look at the inverse pattern. You have a neckline. At there, and it closes above. Again, same thing. It goes above and closes above on whatever time frame you're on. That is your buy signal. That is how you know you have a confirmed head and shoulders, and that's when you're supposed to buy. Okay, and again, the double, black, double. Yeah, this idea where there's 2 heads, 2 shoulders, and still the same idea. When it breaks above here and closes above, that is when you buy. That is your number one pattern, the double or complex. All right. The next one, actually, let's just go back to the little document so we can show them. Triple bottoms, there's the channels. You have horizontal channels and bearish channels and bullish channels. And the reason why these are also continuation patterns I mentioned earlier is because they continue to go in the direction of the trend, or continue to go sideways, continue to go down, continuing to go, but eventually they break out. When they break out, that's the reversal portion. And so that's why these are both. You can trade a channel where you're buying, you're continuing to ride the channel up or down. That would be a continuation type trading, and we'll talk about that next week. Or you can trade the breakout of this channel, which is the reversal of the channel. That's what we're talking about this week. And the head and shoulders, I don't have an example of a double head, double shoulder, but there you go. It's again showing breakout of the blue line is where the entry is. Okay, next one, there's some caveats to it as well. So the next one we have is a cup. Cup or rounded bottom or rounded top. They're also called that. Most people call them cups. And I see so many people trading cups the wrong way. I thought I would want to make sure that everyone understands it. So a cup looks like this. You have a thing coming down, and most people see this, right? And what are they doing? Drawing a line here and going, okay, I'm in on the breakout, right? That is actually the wrong way to trade a cup. And in fact, interesting fact, 74% of the time, in other words, 3/4 of the time, a cup will do this. Let me draw it with the red. Cup will end up doing this. It will pull back. And that's why, that's why, let's draw this again. Here we have our cup. 74% of the time, what's going to end up happening? It's going to pull back and create a cup and handle. And no. There we go. I can spell. 74% of the time. Therefore, do not buy breakouts of a cup pattern. Just don't buy this. Don't. 3/4 of the time. Want to waste your money? Go ahead, buy a cup. It's not the proper spot to buy a cup. If you want to buy a cup, you actually have to buy a cup at 5 o'clock, and I don't mean 5 o'clock in some random time frame in somewhere in the world. I mean this. I draw a clock in this, and here's 12, and here's 6. 5 o'clock is here. Okay. So let me make it my scribble a little bit better looking. If I get again, I draw my cup. It's coming down. It's coming down. It's coming down. Green. There's my clock. 5 o'clock is here. I want to buy a cup here before it is even a cup. That is the best spot to buy a cup if you want to trade cups. That is where you want to be buying the cup. However, there is a caveat, because there's caveats for everything in trading. If you get this cup pattern and then start seeing, instead of it going up here, let's use the eraser. Erase that. Instead of it going there, it ends up doing this. If you start seeing that, it is more likely to do this. So what do? So you have the cup pattern. It's coming down. It's now moved back up. It's now moved back up. It's around 5 o'clock on my clock, roughly, in as far as angle goes. I get in. Now I get in, and all of a sudden it's kind of doing this sideways channel sort of fading higher, but not really. I should, somewhere around here, should be exiting because it is no longer going to be a cup. It's moved into this pattern where it's come down and then has no energy, no power at all to move higher. And what's going to happen is this: it's going to turn over and it's going to fail. So if you're buying cups, you're buying at 5 o'clock. If somehow the clocks just start squiggling sideways and you want to get out, you want to exit because you do not want to be caught in a move thinking you bought a cup and it failed. As mentioned, 74% of the time it forms the next pattern, which is the cup and handle. And we'll draw the cup and handle. By the way, the cup and the cup and handle also have top versions, though you rarely see them, but they are there. So a cup comes up, 75% of the time it pulls back. Right. Again, we draw our 5 o'clock here, and we draw our 5 o'clock here. Where do you buy a cup and handle? Same spot. You buy it here at 5 o'clock. You buy this at 5 o'clock. These are the points you buy. You do not buy here. See everyone trying to buy cup and handles breakouts. Yes, they will move and break out after the handle. There's no question of that. You don't need to wait for it to do this and pull up and say, okay, I'm in here. You don't have to wait for that. You can buy it way down here and get in nice and early. Or you could have bought it way down here and maybe you bought one partial, bought a portion down here at the first 5 o'clock, waited for it to come up, and now it comes to the second 5 o'clock and you get a second partial. Hell, if you want, and you're really confident now it's broken out, you can get a third partial here. Third part. Okay? But you don't need to wait for this breakout. We'll get into the targets of cups so you know where these are going and where these cup and handles are going. But that's a key point. So many people, so many people are buying here thinking, I got a cup and handle breakout. That's where I should buy. No, you missed. So look how much you've missed. You've missed a ton. You could have got in much earlier. I don't know. You know, you didn't know. It's not your fault for not knowing, but now you do. At 5 o'clock. Don't buy at 12 o'clock. Buy at 1 o'clock. Buy it at 5 o'clock on the pattern here that I'm showing. That's the proper spot. And you will do very, very well if you do that. Let's see. I have. So let's just go back to our Word document. So that's the head and shoulders. Right? This is the cup. Breakout trend reversal at this point, but that's not where we're buying. We're buying down here. And here at 5 o'clock is where we're buying. Hopefully you can see my arrow squiggling and moving. And the cup and handle, same thing. Does the cup, the resistance line that we talked about, but we're not buying the breakout. We are buying down here at 5 o'clock. We're buying down here on the handle at 5 o'clock. We're participating in all of this move, and if we bought on the cup, we're participating in all of this move, plus whatever happens when it actually breaks above the resistance, and we get all of that move too. Okay, so let's go back to here. Oh, sorry. There we go. So head and shoulders, rounded bottom and top, also known as a cup, rounded bottom and top, cup and handle. By the way, again, these do have top versions. You just don't see them very often because usually a tops end up being head and shoulders or double tops or triple tops, but you will, every once in a while, you will see a rounded cup and handle. You'll see one of these. It doesn't happen very often, but it does happen. It's the same thing. The only difference is you can't use 5 o'clock on a bottom, you're using 1 o'clock. So if I'm drawing on the top, it's the same area, right? It's 1 o'clock. Same area, it's just in reverse. Okay, so that you can participate in the move that eventually goes down here. You can get it much sooner. Okay, so the last three are a little bit spins or differences. So just to in review, these first 1 to 7 are put in order of strength. So a cup and handle is the strongest, stronger than the rest. The only caveat, as I mentioned, is the double head and double shoulder. So if I was to have rewritten this or retyped this, I would add a number 8 right in here between the wedge and call it double head, double shoulders, or what they call a complex head and shoulders, bottom or top, and that is the strongest. But otherwise, then it becomes the cup and handle, followed by the cup, followed by regular head and shoulders, etc., etc. So I will take questions on those. If there's anyone who has questions on head and shoulders or cups and handles, let me know. Other than targets, I will get into targets after. Any questions you can see, or?
Yeah, LA Longshot said, since you're looking at triple bottoms, but for any pattern, once the candle closes after the entry point, is it better to wait for a retest and potentially miss the move, or get in on the very next candle that opens and does a minor dip?
It's a great question. A lot of people will wait. I tend to wait. You'll notice many times I say, and a person will say, well, I see a double bottom and it's even broken out. And I just like to wait. I've just learned over the years. And again, you have to understand, I've been a long time at this. My patience level is much higher than maybe everyone, if not everyone, most people on the Discord. So I don't mind waiting. So I will tend to wait. Is it wrong to say, okay, it closed above whatever pattern, and now I'm going to buy as soon as the next bar opens? No, it's not wrong. I mean, many people would do that. They've got confirmation. They got the pattern. It went above. It closed above. You know, what more do you want for it to happen? And they'll take it. And there's nothing wrong with that. And sometimes when you do take that, you get a much better price than, let's say, me, who might say, oh, yeah, I'll wait for a little bit more of a pullback. What I tend to do is I see that happen, and then I'll enter a price that's a little bit cheaper, my option. So let's say at the time of the breakout and the close above, the option's trading at $5. Let's say a long call, just to keep it simple. The long call is at $5. I might put my order at $4.80. And what I'm doing there is saying, okay, I'm waiting. I'm going to let it pull back a little bit. Broke out, yes, it confirmed. It closed above, yes, it confirmed. But I'm just going to wait just a tiny bit to get that little bit better price. Do you have to do that? No. If you want to just trade the break, and if you struggle with patience, the fact you waited for it to break above, the fact you waited for it to close, all power to you. You're learning patience. Go ahead, take the order, take the trade. Why not? There's no really right or wrong answer. Sometimes it's going to pull back a little bit. I did mention the statistic about triple bottoms that 84% of the time they do pull back. Right? So triple bottom and triple top, it'll have that, it'll close, and then still 84% of the time it does that small little dip. So if I'm going to draw that just so that everyone is clear what I'm talking about, there's no misconfusion. Let me just draw that. So here I have this triple bottom, right? And draw my breakout point, and it closes above. Again, the figure and the fact I gave you is 84% of the time it will pull back. Okay? And that's probably partly why that myself, I've learned over the years just to wait for that small pullback. And that's what I've done, just because of so many years of doing that. Do you have to? No. Could you have just bought here? Sure. 84% of the time on a triple, It doesn't apply to double. On a triple, it's going to do this pullback. And so I don't mind waiting just a little bit. I'd rather be wrong. I'd rather miss the trade, and I'd rather be late on the trade than be wrong. So that's what I do it. But there is really no right or wrong answer per se. Only that in a triple, it works more often than it does on, let's say, a double. That answers that question, I think.
Yeah. Another question by Always Learning. He said, or he asked, does volume have importance during these patterns?
A lot of people will say yes. I say no. What matters more on the volume is do you get volume with the breakout? Not necessarily on the pattern. So if I'm drawing, I don't know, a head and shoulders, let's say, okay, I have my neckline here. It doesn't matter that if I draw volume bars, let's use black. Down here, or, again, excuse my scribble. Down here, there were these low volume bars, and maybe there was a little bit more here, low volume. What matters more is that on this breakout, is the volume increasing? Not necessarily big. You have to, there's a key to it. Do I see increasing volume? That's what I'm looking for. Okay? I'm not necessarily looking for big volume, and I don't necessarily care that it's smaller volume down here. And in fact, generally speaking, as the stock is coming down, and I'll draw another one, as the stock is coming down and coming down and coming down, you should see volume look like this, the bottom, right? You should see volume declining. Okay? And only when then you start to see it pick up, should the volume then start to pick up. That's kind of what you're looking for, right? You're looking for this rising volume matching rising stock. And at the tops, if I clear this up, the tops is a little bit inverted, but it's the same idea, right? It's coming, doing that, right? Here, down on the bottom, I want to see volume kind of slowing down. The volume of selling is decreasing as it's rising. Then once it starts to turn over, I want to see the volume go. Okay. So that it matches. This is starting to pick up steam, and the volume is also starting to pick up steam. But I don't really care over here, this bar was small or big, or I really don't care. It's irrelevant. It's more about the trend of the volume, and is the trend of the volume increasing as we're starting to break out? That's what I'm more interested in. Does that make sense to everyone? I'm hoping yes. Unfortunately, I can't see a bunch of nodding heads, so I'm gonna hope that that all made sense to everyone. Again, the volume really wants to start to increase as we're breaking down or breaking up, depending on whatever it is, whatever direction we're going.
Yeah, he said he understands, and he said thanks.
Okay, good, excellent. Any other questions that you can see?
Yeah, Taps is asking, how do you differentiate double or triple top from a channel in real time?
Usually it will take a little while to know. It will start out like a double or triple top, and you won't know. And that's the reason why you really should wait. I mean, you just don't know. Like, you might see a stock and he talked about tops, so let's use a top. So it comes up, it comes down, comes up again. Maybe it does this, and you go, okay, I think Big T was saying that's a 1, 2, 3 top. Then it comes down and Does this? Oh, okay. That's no longer a 1, 2, 3 top, but it still hasn't broken above, so that's still a top. So maybe now I have a triple top, I think. Oh, it comes down. Oh, and it comes out. And then once you sort of, at this point, those with a trained eye or whatever, or with a little bit of experience, start to go, okay, that's not a double top. That's not really a triple top. That's not really a 1, 2, 3 top. You've just started to form a channel. It just takes time. And that's, again, goes back to what I was saying earlier, patience. Patience to wait for the move to develop. Everybody wants to get in here, right? They want to get in here. This is where everybody wants to be. They want to catch the top. Guess what? You will almost never catch the top. You will trade for 25 years, and if you hit the absolute top more than 5 times, you are something special. Because nobody hits the absolute top. Nobody hits the absolute bottom that very often. Okay, but we're all trying to, right? We're all trying to get to these points. That's why we need to learn that patience is important and just let the thing develop. And then it develops and go, oh, we're in a channel. Okay. I think HD. Yeah. HD is a good example. You guys can see my chart, right? Hoping.
Yeah, we can see it.
Yeah, okay, good. So here HD came down from the bottom, came all the way up to this top, came down, okay, I've got a single top. Great. I'm up here, now I've got a 1, 2, 3 top, right? 1, 2, 3. Down, oh, okay, I've got another 1, 2, 3. It's kind of weird, but fine. Oh, another top. And up it came here, and now I matched the tops that actually went slightly above, believe it or not, which is still in the same range. So I still call this the same, basically this top and this top are equal, as is this top. And it comes back down to this bottom. But I've quickly looked at this and said, hold on, I'm in a channel. It's exactly what I'm in. It may not be the most prettiest, most cleanest channel. It's a channel. Okay, so if I take this screen, put it on here. That bigger. Now I can use my pens. We'll use red. Why not? Okay, what do I have? I have a channel. Okay, this is the move that came up. It's done all these little tops. That's a channel. If you look at a daily chart, which is on the left, see that pattern, and it's actually turned into a little flag. So likely it'll do this a little bit, and then it's going to go there. That's what's going to end up happening. At some point, Home Depot is going to break out of this point, because on the daily it's a flag, and we'll talk about flags next week. Flags are not on, because a flag is a continuation or a trend pattern, not a reversal pattern. That's Home Depot, and that's how you tell if it's in a channel. You actually have to wait. You have to wait for it to play out, because if you're looking at this, and I go back to this thing, and I'll use a different color. Let's use blue. What was I waiting for? I was waiting for a top. I was waiting for a bottom. Need another top. Now what did I need for it to break down? Needed it to this, go below. It doesn't. It goes like this, and then it goes up again. Okay, fine. Our continuation trend trading system, I need it to break above. It doesn't. Not yet, anyways. What does it do? It comes back down, tests these bottoms, comes back up, tests it again. I know that if I'm doing a reversal pattern, I need it to go below here. Until it goes below here, it's not a reversal. By waiting, being patient, I didn't get caught. I'm just sitting waiting. Yeah, my time on my option is burning, and that sucks. Well, if you're on a long call, let's say by long calls down here, like I did. Yeah, it sucks. You have time burn, right? But As far as a reversal pattern, no, it's not a reversal pattern. I would never short Home Depot here, ever. I wouldn't short it up here either, because I'm in a channel until it sorry, let me rephrase that. I would short it if I was scalping or day trading. Maybe I'm shorting here. Sorry, let's use green. Maybe I'm shorting here, buying here, shorting here, and then whatever, or shorting here, buying here, whatever. If I'm scalping. If I'm trend trading, or if I'm reversal trading, or if I'm swing trading, or whatever, it's in a channel. I'm not going to trade the breakout, and I'm not going to trade the reversal. Does that answer the question? I think it does.
Yep, sure does.
Okay. Any other questions you can see, or we'll go on to the last three, and then we'll do targets.
Yeah, there's somebody on YouTube that asked, what is the best way to see volume on Thinkorswim? Or is it just the basic one that they provide?
You look down here, I mean, you can adjust the colors and whatever on volume and Thinkorswim, but all these little bars down here, those are volume. There's going to be some spikes. This is a 15-minute chart, so there'll be some spikes on the open and on the close. That's what happens. If you go to the daily chart, you can see that not today, but yesterday, I guess. Yeah, yesterday. Today's Monday. Friday there was a volume spike. To the volumes, you just use that. Again, you can change colors. You can even have them up volume bars be green and down volumes be red. I personally don't care for that. I don't need to know for my type of trading, but that doesn't mean it's wrong. It's just what other people use. That's one way, and you can also do the volume the other way, which is what you see here, volume profiles, and then this is based on the price, how much volume at that price. So if we're looking here at 320. The daily chart, this is how much volume has happened at 320 specifically. It's another way to do volume. But we won't really get into volume profiles and all that kind of stuff in this session because this is really about price patterns. Perhaps I will do a session on volume profiles. Somebody else might, maybe, who likes them.
Cool, and then there's one more question here. IR455 is asking, is confirmation, also known as break above, below, usually just a single close above the signal line? And also, does a V-shape count as a potential double top? If so, where do we place the line to signal a reversal?
Tommy's on again. Then let's break down that question. So, is a single close above count as a confirmation? Yes. Can you wait for more to close above, or even the pullback? As I mentioned, yes, you can do that too. And then the other question, sorry, the V shape. I couldn't quite hear that one.
He asked if a V-shape counts as a potential double top, but without a visual, I'm not 100% sure what he means by that.
I don't really know, but this is not a single bottom, or sorry, this is not a double bottom, and this is not a single top. This is a V shape. I'm not sure what you mean by the question specifically. That is a single bottom, not a double bottom. Okay, we talked about different examples.
Yeah, I think the double bottoms you showed earlier, like they're more of a U shape, and I think what he's asking is when you have a V shape recovery off of a single bottom, does the top of the V signify a double top still? Because on the V there's like the first top and then there's a sharp reversal and then another top.
Okay, so yeah, let's clear that up a little bit. So I draw specifically V's, and I guess they look like A's. It doesn't have to be a V shape. So, I've been all along throughout the session, I've been drawing them like this, right? They look like V's. This looks like a reverse A, right? It doesn't have to be V shaped. It can be U shaped. So you can have bottoms, sorry, I'm using the eraser still. You can have bottoms that look like this. Okay. And I think the website, what's it called? The pattern site. I think it's called the pattern site. Not trying to give them a plug, but they call these Eve bottoms. And then they call this Adam bottoms. Personally, I think that is irrelevant. It doesn't matter that the bottom is rounded. Use black. It doesn't matter that the bottom is rounded. Or is a point. Irrelevant. And it also doesn't matter that the point up here that you're trying to break above, whether it's rounded or pointy. Irrelevant. And I think on that site they also show combinations of Eve and Adam, which again I think is missing the point here. Like what you're trying to do is you're trying to hit a double. If it looks rounded on one and pointy on another, and this is rounded, it's still a double. If it looks pointy here and pointy here, but then rounded there, still a double. It's irrelevant. So, somebody's talking? Mohammed? I think that's how you pronounce your name, sorry. Do you want to ask something? Oh. Okay.
I think he just turned his mic off.
Okay. Did I think I answered IR 455's question? Let me know.
Yeah, I think that summed it up well.
Okay. All right, perfect. All right, so we go back to our Word document. So we've covered all of these. We're down to cup and handles. We did all of those. Those are in order of importance or in order of strength. Strength is actually the better way to say it. The strongest is 7. The weakest is number 1. Now we get to a few others that are they're just unique. Okay, so let's get into wedges. So wedges are actually both. They're both a continuation or a trend pattern and also a reversal pattern. So let's just clear this. A wedge will look like this. The stock comes down. Actually, I kind of drew that wrong. Let me just erase this part. And a wedge looks something like that. Or maybe if I draw the wedge first and then I can fill in the thing, but it looks, a wedge will look like this. And the stock does this. Okay. It is a continuation or trend pattern in the sense that direction, as you can see so far, is down. Okay. And if I clear that and draw the reverse one, let's again draw the wedge lines first. Here's the wedge lines. And here's the stock. So as you can see so far, the trend is up. Therefore, the continuation or trend pattern so far is up. However, technically, or in reality, a wedge is a reversal pattern. We'll use this. So here we have an ascending ascending wedge or a rising wedge. A rising wedge. Okay. And a rising wedge reversal will maybe do this. It's a reversal pattern. Let me do the other one. So again, a falling wedge will look like this. Then it moves higher. It's a falling wedge. Falling wedge, but it breaks out and moves higher. Now, a few things that we need to know about wedges that you should keep handy here. First of all, wedges, just like head and shoulders and just like cups and handles, are large patterns. Okay, these are large patterns. So what does that mean? It means there's over 15 bars at a minimum. I see way too many people drawing on a 5-minute chart or even on a 15 or even on an hourly chart, and their wedge looks something like this. And they draw the thing and they go, look, I'm in a wedge. Right? Sorry, it's not the greatest drawing, but there's like 4 or 5 bars, even 15 bars, and they go, I'm in a rising wedge, I'm in a falling wedge. I'm sorry, you're not. You're in some other pattern, or you're not even in a pattern. It's part of a top pattern, it's part of a bottom pattern, or whatever it is, or it is potentially, some wedge that's going to happen in the future, but currently you're not. A wedge is a large pattern. It's over 15 bars. It also needs to have at least 5 reversals. What I mean by that is, if we look at, let me just get rid of this little wedge. It needs to have 1, 2, 3, 4, 5. Wedge, by definition, must have at least 5 reversals off these lines. Right. Draw all the word. So hard to draw with my fingers on my screen. 5 reversals. In order to have a wedge, whether it's rising or falling, you need to have a minimum 5 reversals. That's a key point to understand. Wedges are also the second strongest pattern. Okay, so the first strongest was a double head, double shoulders pattern. The wedge comes in at the second strongest pattern, even stronger than cups. And the only reason I say that is you'll understand that when we get to targets. The cup pattern is strong, the target is not hit as much. So that's why we call the wedges a strong pattern. Now, another key thing to understand about wedges, most people fail to understand. Let's just clear the whole thing. Because a lot of people will say, well, wedges don't work. A lot of people will say that. I think I've even had a strong discussion, call it that, on the Discord about that. The reason for that is people will say, right, here's my wedge, my chart. It looks like that. 1 touch, 2 touch, 3 touches, 4 touches, 5 touches. It breaks out. Right? I say wedges don't work, because what ends up happening is it does this. Right? It comes down. I'm going to just draw my line a little bit. And it comes down to here. And they'll say, no, wedges don't work. See? Proved it. And that's the key important factor. And there's another statistic that you want to keep track of. 47% of the time, wedge will pull back to its breakout line before moving higher. 47% of the time, it's going to do this. Half the time, a breakout will move back. Remember, we were talking about triple bottoms? 84% of the time, it pulls back on a triple bottom, right? It breaks out and pulls back 84% of the time. On a wedge, it's 47% of the time. Again, repeats sort of what I was saying earlier. Like, you will always be rewarded if you're patient and you wait. Now, you could say, well, but that's only half the time. That means half the time I missed the move. Yeah. So, like, that would be my answer. So what? 7% of the time, you're going to be right. Because there's going to be some portion of percentage of the time that the person who's saying that wedges don't work is right. Not only does it pull back, but it just does this. So if I'm telling you I would like you to buy wedges, I'm also telling you to wait for the pullback, because I want you to be more right, because I know that 47% of the time they're going to pull back and they're going to bounce and they're going to move higher. You're going to get a better price. Instead of getting this price up here, you get this price down here. But wouldn't you wait? You're going to have a better chance of, first of one, of it confirming that it is and truly a wedge breakout. Two, you're also confirming you're getting a better price. And three, you're avoiding the scenario that perhaps the person who's saying that wedges doesn't work was right this time and they didn't work. By waiting for that pullback and waiting for it to bounce, sometimes that pullback it looks like this. Let me just erase some of this. Sometimes that pullback looks like this. It doesn't quite touch the bottom. It sort of misses it almost a little bit. It doesn't come all the way down. Still better off waiting for that pullback here. That's when you want to buy the wedges. So now if I'm doing the reverse so that people follow and don't get any sort of confusion, if I've got a rising wedge, looks like this, stock, this multiple touches, 47% of the time it's going to come up and then do that. And so you want to wait for those pullbacks. You want to wait for them on the triples. You want to wait for them on almost all the patterns. And if you don't, that's okay. If you don't, in this scenario, if you bought the breakout and for a little bit of period of time, you're worried because it's moved up a bit and you're losing. You could have got up here. There's going to be whatever. What I'm telling you is if you learn that patience, you're better off waiting for that pullback. 50% of the time. Okay, so now when we demonstrate that on the Word document, just to make sure that you can see it. The cup and handle, there's the wedge. There's another type of wedge, which is an expanding triangle, which really is just a wedge. They call this site that I pulled it from, call it an expanding triangle. The lines are a little bit different in the way that it is, but effectively it's just a wedge and it has the same outcome. Still, it's rising. Really, it's bearish. It's rising, and then it'll break down and end up moving downward. It's a reversal pattern. Same way on a bullish one, even though it's still falling, but expanding, breaks out and moves higher. These are both wedges as far as I'm concerned, even though they call it an expanding triangle. Or other people refer to it as a megaphone, the megaphone pattern. At the end of the day, they're still reversal patterns. So that's the wedge. And next one is retracements. So here's where Fibonacci comes in. So Fibonacci, just for those who don't know what Fibonacci is an Italian guy who figured out that the entire nature has this pattern, 1.62 or whatever it is from each other, seashells, everything, almost everything in this world has this fat Fibonacci pattern, and people apply it in stocks, and it looks something like this. So you have a stock that comes down, and then it does this. And then each of these different points the 38%. This is the 50. Here's the 62. 62. Excuse my scribble. Oh, so hard on this. Should have got a touch pen. Would have been easier. 62. Okay. Sorry that they're not perfectly even in between it, but basically 50%, 38, 62. So there's another reversal as you have this long down move. Stocks when they move up. So you end up with this scenario where you get this 1, 2, 3, let's say. You tend to move, usually the 1, 2, 3 is down here, by the way. Usually it's like that. Let me clear this. I don't want to confuse anyone. Let's do this. Just so that there's no confusion. Okay, so you buy this 1, 2, 3 bottom, okay, let's say, and you're in here. Stocks tend to move to these Fibonacci levels. Okay. You do not want to buy, if you're buying a continuation or whatever, or you're buying breakouts, you do not want to buy at these points because they tend to pull back. There's another level here that I didn't mention, but this is the 23. And then there's another one up here, the 78. What ends up tending to happen is these stocks, as they're coming up, they hit these Fibonacci levels, 38, they tend to pull back. They hit 50% and they tend to pull back to 38. And then it hits 62 and it tends to pull back to 50. And it moves up to 70 and it tends to move back to 62. You are trading reversals. You are not trading here. Let me use the blue. You're a reversal trader. You're not buying here. You want to buy 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 here. So you can use Fibonacci as a way, if you're just using price and you're combining all these other patterns that I've already talked about, you can use Fibonacci also to trade off of, to buy. You can also use it to sell if you wanted to. If I was to draw this, you could use it to sell here. You could sell here when it hit these levels, but we're not really talking about that. We're talking about reversals. And so reversal patterns are trading using Fibonacci. Tend to 50%, hit 38 and reverse back down, and then you can buy the reversals when they bounce. Okay. And you want to wait for that reversal. That's the key point I'm trying to make here. You want to wait for the reversal. You don't want to be buying as it's hitting 38 or as it's hitting 50. Okay. So if I go to my little diagram, okay. So the stock has moved up. Actually, this is the numbers have shifted over because of the way I had it. There you go. The stock has moved up. It's done a top. Did some 1, 2, 3 top, or did a double top somewhere up here. Now it's come down. It's hit 50. They tend to act as support and resistance, and they tend to go in. Does it always go up to here? No. It does tend to come here and then move back up to 38 or even 23, then move downwards, right? So you get this pattern. We're not buying reversals here. We're buying them on these lines as they bounce back up. Similarly, if it comes down, it does a double bottom or whatever down here, comes back up, it hits 38, it'll come down, it hits 50, it'll come down, and you want to be buying on those bounces of those lines as they hold. That's really what retracements is all about on the pullbacks of those. And then the last pattern before we get into targets is gaps. So what I'm going to do is go back to this. So it's easier for me to show this diagram. So gaps, there's various types of gaps. I will get into some of them next week because a lot of them have to do with continuation trades versus reversal trades. But gaps tend to, when stock opens, it gaps up, tend to reverse back down. and go back, and that gap then ends up as a support or a resistance barrier. Okay? So you end up having this opportunity to wait again. You missed the move, you didn't get it down here, you missed the move, it gaps up, wait for it to come back down, fill the gap. And it often will fill that gap. Most of the time it does fill that gap. And then you can buy it down here. The gap then ends up being your support opportunity to buy the stock, and it runs higher. This one here is a breakaway gap kind of. Actually, I should show them. Let me just clear that. I don't want to get into the ones that are continuations. The ones that are reversals, you end up with a channel. Okay, here's your channel, and then it gets some sort of, I don't know, upgrade or something, and opens here. That's breaking out, and you wait. Let's say you're using the 15-minute chart. You wait for the close of the 15-minute. It's broken out. That here, this is called a breakaway gap. Okay? It's broken away. Break away. I like to personally wait first 30 to 45 minutes on the open. You get an open like that, I don't know that it's not going to do this right after. Like let's say these are 15-minute bars. Here's the first one, second one. I don't know that within an hour it's going to close that gap. So I personally don't buy a gap breakout, a breakaway gap right away. I wait for it. Again, I'm being patient, waiting to see if it'll come back and fill. But sometimes it doesn't. Sometimes it doesn't do that. It just keeps going. And it looks like this. Okay, and that's a reversal breakout. A gap, breakaway. We'll talk about next week continuation gaps, and we'll talk about exhaustion gaps, and we'll talk also about, there's another one we can maybe talk about now is island reversals. And that's when you get this gap way up at the top, and there's this space between here and here. This is also a reversal, island reversal. So you can trade those gaps as well. Okay, so those are the patterns. We'll get into targets, but I'll take questions on wedges, retracements, and gaps if anyone has any.
There's a good question in here. Somebody asked, and IR455 is asking if you have stats on fib reversals.
Do I have stats on fib reversals? No. I think the quick answer is no, I don't. However, most stocks, when they do, let me draw it. When they do pull back, they'll pull back 50% of the time. Okay, or if I'm doing it the other way, this all out. Okay, if I'm doing a top, most stocks will pull back 50% of the time. Do I have an exact figure for that? No. A lot of stocks will pull back at least 50% of the time. What I've noticed is in a lot of, not lately, they tend to move even more. 62% seems to be even more happening more than it ever has. It used to be 50 used to be pretty like almost a good concrete wall, and 62% now tends to happen more often, which would be this. I also want to make a note and mention something, and we'll get into this with the targets, but it's slightly different in a bearish market versus a bullish market. In a bearish market, things tend to not get all the way versus a bullish market. So how do I draw that? Let me show you. It's easier understood with targets, but what you will see a lot of times in a bearish market is something like, let's say I'm doing a triple top. It won't quite get all the way, right? Because it's a bearish market, it just doesn't have the power to get all the way up to this line. That's another small nuance that a bearish market has a tendency to not have enough power to push all the way to form and fully form the pattern. Whereas a bull market will do that. In bull market, we might even see a slight peak above and then it comes down, right? Where it looks kind of like that. Whereas a bear market, you get a lot of these first ones. More questions?
Yeah, it looks like there's a lot of questions that revolve around whether to use the candle wicks or the candle body. One of the questions was, does the pullback on wedges get invalidated if it gets a long wick but closes above the wedge breakout?
No, it doesn't. All patterns should be like I've seen it so many times. All these people, a lot of people are doing this. There, let's clear this. A lot of people will draw their lines, and they will use the end of the wick in all cases. So you end up having. Okay, so let's do it like this. Have a falling wedge. Do a falling wedge. Something like this. Okay, so there's your wedge without seeing the price. And so what will end up happening is you get these lines, these bars, and the bar, bear with me, bar looks like this. This is probably not the best drawing because I'm doing this totally on the fly here. I'll try to illustrate what I mean. When you're drawing your patterns, you want to draw where the most touches are. And I mentioned that before kind of with the beginning. Not that slide, this one. More touches, the stronger the pattern, right? When you're drawing your patterns, you want to draw them where it has the most touches. So this one here, red, it broke through the line. This is not really the best thing because I didn't draw it very, very, very well. But let's just finish the thing like this. I'm going to finish this off like that. And I'm going to finish this bar like this. Just trying to make this look a little bit easier, a little bit better. Right? Now, if I was drawing the line, I could have drawn my line like this, right? I could have, let's use a different color just so that I don't get confused. Green here. And this is black. All right, again, apologize for this. What happens when you're using a touchscreen? I could have drawn my wedge like this, right? Remember, I need, in a wedge, for example, I need 5 touches, right? I need 1, 2, let's draw the green line up a little bit higher. Sorry, I know it's not perfect, but anyway, you get the point. I need 1, 2, 3, 4, 5, and 6, 7, whatever, but I need minimum of 5 touches. If I'm drawing my line down here, just because it broke through, as the person who was asking, it actually closed. Let's say nothing is perfect in trading. I think everybody knows this by now. If you don't, you're going to find out really fast. You're never ever going to find the perfect pattern, the perfect setup with a perfect indicator with a perfect anything. There's no 100%. So you're going to have some scenarios where sometimes it just peaks below a line or just peaks above a line, but then it closes below or closes above or whatever. And you're really trying to say, what does the whole picture tell me? I'm looking at this from 30,000 feet. What do I see? Not go look at a microscope and say, okay, if I look at a microscope, then this hammer, right? All I see, if I'm zoomed in, all I see is this. Right? We're talking about this thing here, right? I zoom in, that's what I see. And this is another reason why I say don't use 5-minute charts, don't use 1-minute charts, don't zoom in, zoom out. Pull it back up so you can see the whole pattern, because if you're just zoomed in, you're going to say, oh, it violated, that's it, it's over, it's done. No, because if you look at the whole thing, it just did a small little whatever, maybe even wasn't small, maybe it was a large because, I don't know, some market event. At the end of that bar, it pulled back, it closed above, and it kept the whole pattern. You're going to draw the whole pattern. It kept the whole pattern intact, right? You're still in the pattern. So yeah, I'm using the entire candlestick, but I'm not going to convince over a violation if it's only 1 or 2. Has to, like, if I drew this over here, this pattern, and all the lines black, all the lines are breaking through, and they all look like that, then my pattern is not that. My pattern is actually down here, right? Maybe it's not a wedge anymore, because depending on how the pattern is, and let's say the lines, these lines are up here. Well, I don't have a wedge anymore. Maybe I'm in a channel. Maybe that's what I have. I have a channel. I don't know. Depends, right? So if I'm getting a lot of these line violations, then yes, it's no longer that pattern. But if it's only one, it doesn't really matter. Okay. Any other questions before we go to targets? Because we're already at 2 hours.
Yep, I don't see any more questions.
Okay, so let's go quickly through them. So double bottom and 1, 2, 3 bottom, triple bottom. They all, well, not so much the 1, 2, 3 bottom, but a channel, a triple bottom, and a double bottom. So let's bring this back. Let's bring up the list. So the double bottom, number 1, the triple bottom, and the channel bottoms all share the same targets, and they have two targets. Okay. So you have a double bottom. Do this, and this applies also to tops, by the way, just so everyone's clear. I won't be able to draw every bottom and every top. Okay, so we're just going to focus on bottom. So I have a double bottom here. What's the target? 2 targets. Okay. First target is this. I'm going to use red. Distance here to here is A. Okay. Use red. That distance. That's A. First target is this. A. Okay. So I'll draw the line. That target of A on the double bottom, distance between the bottom and the top, first target on a double bottom is the same. The height becomes the height. Height of the double bottom becomes the height of the target. A equals A. Similarly, if I have a triple bottom, 1, 2, 3, okay, and it breaks a distance To draw this a little bit better. Comes red. Okay. That's the first target. Okay. Jeez, didn't write that very well. Doesn't matter. Okay, so there's your first target on double bottoms, triple bottoms, and channels. Okay, we'll also draw some channels. So let's just clear this. If I'm in a falling channel, it's red. Okay, here's my falling channel. If I'm, you know what, I'm going to do the whole thing all at once. I'm in a sideways channel. And then I turn into a rising channel. Do them all at once. It's easier. The distance, draw right here, A. Distance, or let's do over here, A. Distance. Or even over here. A. That becomes the target. So if it breaks out, I draw my green line. If it breaks out of this declining, falling channel, it's going to move up distance of A. And if it breaks out here. If I'm in a sideways channel, it's going to move up distance A. Okay. Or if I'm in a rising channel, it breaks down. It's going to break down the distance of A. That is your first target on channels. Also similar for double bottoms and triple bottoms. Second target is width. So the first target I talked about is height. Height of the channel, the height of the double bottom, the height of the double top, the height of the triple bottom, triple top becomes your first target. Second target is a little bit more subjective because depending on how you zoom in and zoom out on your chart, it's going to be subjective. However, just to give the general idea, the width of the channel, call that B, is the height, becomes the target. Okay, B is your second target. That does not hit as much as A does. A will hit much more, obviously, because it's closer than B does. Same with a double, say a double bottom. The width, which is B, which is not really the best picture. Let me draw it a little bit better. Okay, because you could have a double bottom that looks like this. Okay. The height is your first target, A, on the breakout. And that's here. That's A. But your second target is B. B is a little bit bigger, not much bigger in this example, but that would be up here. That would be B. Same applies for triple bottoms and triple tops. So the first target on a double bottom, triple bottom, and a channel is the height of distance between the top and bottom of it. Second target is the width. And the width does not always hit as often as the height does. Does everyone understand those before I go on to others? Do you have any questions on that? The first target is the height. Second target is the width. see any questions popping up?
Lajababa asked, how do we determine the time it will take to get to the target?
That's a great question. There's, I can't really answer that with a straight answer. It can sometimes, sometimes what you'll end up happening is this. I'm going to clear this. Sometimes what will end up happening is it goes in a channel. We know our first target is what? Our first target is the height. Okay, and our second target, our first target is A, and our second target is B, which is the distance. Right? Generally speaking, A will hit in the time frame it takes normally to go from bottom to the top of it. You might be looking at, say, let's say, I don't know, a daily chart, and it took 8 days or 9 days to go from the bottom to the top. So there's a good chance that within 8 or 9 days that it took to go from here to here or there to there, it'll also hit A. B, however, it's hard to say. It does not. Many times the second target, the B, will happen very fast. That's why channels are one of the strongest patterns, because there's this, they call it coiling or consolidation or squeezing is another term that's used. It gets tight and tighter and tighter and tighter, and there's this built up tension, and then when it finally explodes, it explodes fast. Sometimes you get the breakout of B, and it happens just as fast as A would. It just blows and goes, right? Let me see. You know what? A good example was Oracle. I remember a few people were trading Oracle down here in March. Let's see if I can get back to, when was it? March 11th? Yeah. Let me get rid of this. Don't need this. Move. It's January. Here we go. So in March, when Oracle had earnings, right after earnings, I know there was a few people. I think Guru was in the trade. I even suggested buying Oracle. There's a few others who suggested it. Oracle had earnings. It tanked, and then it went sideways. And there was a lot of people who were in it, like waiting. Is it going to break out? And I think this lasted 10 days. Something like that. And I did this sideways channel. I know it doesn't look like a clean one. It does this channel here. If I was to take this, just do that. And we're talking about this time frame here. All right, let me just put that on the whiteboard. Screen. And we'll draw a line. So here's your sideways channel right here. Okay. And it's Tuesday, Wednesday, Thursday, Friday, a whole week, and Monday, Tuesday, Wednesday. Like you can see, it took almost 2 weeks. This is a sideways channel. Now it's not as beautiful as those ones I've been drawing, where they hit the tops and bottoms in every case, but it's still a sideways channel. It's back here. And so what was the target? The initial target is A. Right? And what is A? A is the distance from here to here. Right? And what is that distance? We look at, it's about 65 to 68. It's $3. So here, there's A. Okay. What was your first target? How long did that take? Oh, we have Wednesday, Thursday, Friday. I don't know if there was a Friday. I guess there was. I don't know if it was a holiday, but anyway, Monday. So it was either 3 or 4 trading sessions it took to hit the first target. The second target is the distance. So we have this distance here. Yes, I acknowledge it's a little bit subjective because depending on how much I zoom in or zoom out, could affect it a little bit, but you have to try to be reasonable and flexible. There's your target for B, is the width, the height. Okay, so we add that, and we have to kind of use our fingers a little bit, but that is roughly, I'm tilting my head if you can believe me here, but that's roughly somewhere around here. Okay, that's B. How long did B take? Now we have another week. If it was here, then it happened within the week. And if it was there, it was another week. It was about 2 weeks. Okay. This here was 2 weeks as well. So the distance or the width of the channel took approximately 2 weeks for it to hit the height that it became as its target. It was roughly the same. A took roughly what, 2, 3, 4 days to kind of hit bottoms and tops, and it took 2, 3. So the simple answer really is it's around the same amount of time that it takes for it to happen. That's a rough estimate. You can't always expect it that long. Sometimes it's much shorter. It just depends. But this specific Oracle example, it takes about 3, 4 days to go top to bottom. Therefore, it took 3, 4 days for it to hit a target. It took 2 weeks or so for it to do its channel. It took 2 weeks or so to hit its target. They're about the same. Did I answer that question? I think so. All right. I'm going to say yes. All right, so targets for head and shoulders and cups. All right, so head and shoulders, what is it? Let's do an inverse one. And shoulders is like this. Okay. The neckline is here. Your target is this. The distance from the neckline to the head comes the target. That is your target. However tall that is from neckline to head comes your target. Those targets hit, if I remember correctly, they hit 89% of the time. Or is it 88%? It's 80 something. I think it's 88 actually. 88% of the time the head and shoulders will hit its target. So it's a good pattern to play because once it breaks out of the neckline, it has a strong chance of hitting its target. The next one is a cup. So let's go clear that one. And we'll actually do cup and handle too. So first of all, we have the cup. We have the handle. We buy at 5 o'clock. And here, as we mentioned, we have a resistance line. The target is here. And there's 2 targets as well on a cup and handle. The only problem with a cup, more than a cup and handle, is the second target, the larger target, only hits 37% of the time. You say, well, why would people trade a cup and handle if it's only hitting 37% of the time? Well, that's because a cup, first of all, we're buying down here, not at the breakout starters, and so we've already made a ton of money. And second of all, cups are the largest pattern. So if you take all of them, put them all together, a cup is the largest pattern. It takes months, cases, for it to play out. A lot of people will draw a cup on a 15-minute chart that looks more like that, right? And they'll say, "Oh, there's a cup and handle," and it looks more like a shot glass than a cup. The cup is not meant to look like this. Like, I don't want to draw anymore. It kind of looks almost like something it shouldn't be drawing on this page. But basically, my point I'm trying to make is a cup does not look like that. A cup needs to be rounded, is massive, and it takes time. So hitting its target, which is here, this distance, so big, it only hits 37% of the time. This target will hit much higher. I don't have odds, but I think it's 70, 80%, something like that. So that target, which is the initial, we should probably have called that B. That initial B target will hit much more. The A target only hits 37% of the time. But that is your target. It's a massive move. If you think about it, you bought it down here. You made all of this. You held through all of that. But then you made that much more. It's a big, big move. It will only hit 37% of the time. Wedges. This. The target, again, is the width. See, there's a common pattern here on these things. The width at the widest point comes the target, the breakout. Okay. Same with on a wedge. If I draw a wedge rising like this, looks like that. Actually, no, I'm wrong on that one. I apologize. This is not right. I apologize. The target is actually here. It's top of the wedge, or in this case, the bottom of the wedge. On the breakdown is the target. It's not the width. I apologize for that confusion. I should have said that. So this is A. And this is A. It's a different color. There's your target. This also, now, I've had a discussion with a few people. I don't know who exactly it was. Can't remember. It doesn't matter. Some people don't agree with my targets on wedges. The pattern site doesn't have these numbers. However, based on my testing and based on the course that I took way back, and I knew nothing about trading, this is the numbers they came up with. So you can take them with a grain of salt. You can disagree with the numbers on the targets. I've already told you that the breakout of a wedge will pull back half the time, or 47%. But according to the numbers I received, 89% of the time, a wedge will hit its target, which is, again, these numbers. And I know there are people who don't agree, and I know the pattern site doesn't agree with that. I don't necessarily agree with the pattern site. I only bring it up because I know this discussion has happened before in the past.
Hey, Big T.
Yes.
Someone
Hello.
asked, it's Riley, hey.
Right.
Somebody asked, how do you differentiate between a breakout and a fake out?
How do you differentiate between a breakout and a fake? Well, I mean, if you're buying as soon as the breakout happens, you wait for it to go above or whatever. Let's say you're doing a breakout, so you're trying to go higher. You wait for it to go above. You wait for it to close above. It does both of those things. In theory, you have a breakout, but then it pulls back. And I've tried to give some of the numbers on certain patterns that are breaking, that will pull back. You don't ever know with 100% certainty that it's a breakout versus a fake out. Just don't. Even if I'm doing a, let's gonna clear this here. Even if I'm doing a channel and it looks like this, right? It comes down and does a channel, does a channel, does a channel, and then I've got my lines here, great. And It moves above. Okay, it moved above. It closed above. Great. You don't know with 100% certainty. You just never, ever truly know that is not going to possibly be a fake out. What you do know is that a lot of these patterns tend to pull back. So for some of us with patience, for some of us with experience, we don't care if we miss move. We don't care that potentially, let me just do this again. Moving the potentially, okay, it closed above, but potentially it just does this. We don't care. Because we have learned over the years, some of us, not all of us, we have learned that over the years that more often than not, it will do some sort of pullback, not violate the breakout point, and then do this, right? The question was, how do you know? You just don't know until it happens. You can never, ever truly know that that breakout won't potentially be a fake out. How do you counteract it is with what I'm saying. You wait for the breakout, you wait for the close above, you wait for some sort of pullback. Sometimes that pullback doesn't happen right away. And then you're kicking yourself and you're saying, oh crap, I missed this good move. I could have blah, 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 whatever. But what ends up happening is this. It moves, and then does one of these. And you go, ah, great, awesome. I was smart. I didn't get fooled. I got my pullback, it held, and I bought there. But the question is, how do you know? You just never truly 100% know that it's going to be a fake out versus a breakout. You can counteract it with a pullback.
I imagine you're kind of tired, so do you want to go to like 9:45, like EST?
I can go as long, if everyone wants to stay till 2 in the morning, I'll keep going. I'm good.
Wow, what a king.
And no, I'm not a king, but just a humble servant. I'll keep going, but I wanted to cover at least the all the different targets. Target on the retracements is the Fibonacci. So we'll go back to here. What's your targets? Targets are, it comes down, it does a reversal. It's going to hit the 38. It's going to pull back to the 23. It's going to go up to the 50. It's going to pull back to 38. Going to go up to the 62. Pull back to the 50. What's your targets? Your targets are the next Fibonacci. If you have this large move and you're able to get a double bottom or let's say a triple bottom or something down here, what's your target? At least 50% retracement. That's just pretty standard in the market. Most of the time you're going to get a 50% retracement on a large move. It doesn't always happen, but that's usually what happens. As far as gaps go, I will cover the target for a breakaway gap, which will be next week. A target on a continuation next week. A target on a breakaway gap is really, like I said before, it depends on what it was. So if this was here, it's great that this one's here. So let me remove this. Okay, and here's my breakaway gap. Got some earnings, or not even earnings. I got a news, an upgrade. The target on this gap, on a breakaway gap from the channel, is the channel's target. It's not. There's no target on the gap. There is a target on, like I said, on a continuation gap, which is way up here. Continuation gap, which I will discuss next week, is this gap. We're not talking about the gap down here. We're talking about this gap. This gap here has a target. This gap here does not. Again, you don't know that it's a gap until you have confirmation that it keeps going. Basically, the target on this gap is whatever channel was, or the target is for the double bottom or double top or whatever. So that's it. There's no target for this specific gap. And then the 1, 2, 3, which is the one I skipped. 1, 2, 3 is basically the targets are similar to Elliott waves. I didn't want to get too much into Elliott waves. One, because there's a lot of rules for Elliott waves. Two, this thing is all about price patterns, not Elliott waves. But generally speaking, just draw it. So you get the 1, 2, 3, and it goes up. Right, and it goes up, goes up. Generally speaking, the distance of here comes the next target. Of course, Elliott waves, it's sort of similar that the distance on wave 1 could be this entire move, depending on, this could be all of wave 1, right? But it's the same general concept that wave 1 can be a little bit, it sort of measures how big the next wave will be, wave 3. But I don't want to get too much into that. Basically, it's the easiest way to understand it on a 1, 2, 3 is whatever the distance here, similar to double bottoms. This distance here becomes the target for the next level. I probably shouldn't have even mentioned Elliott waves. We can do that another time, and we'll bring in people who are more experts at Elliott waves than I am. I haven't used them in 20 years. So.
Someone asked the question, how did you get into trading? What made you wanted to start?
So I wanted to be in trading since I was 5 years old, or at least as long as I can remember. I remember watching the news and seeing all the paper flying on Mercantile Exchange and the paper flying on the New York Stock Exchange, and I live in Canada, so there was also paper flying on the Toronto Stock Exchange floor, and that's just what interested me. I immediately was like, that's what I want to do. That's what I've always wanted to do. Unfortunately, I grew up with no one around me telling me what to do or how to do it, and no one showed me what courses to take. Nothing. I had to basically learn it all on my own. But I pushed, and I got a job at a brokerage. I worked for a broker, and I got my license there after taking a bunch of securities courses. Now, I don't know the name of the courses in the US because it's different in Canada, but basically I finally figured out I had to take certain securities courses, and I took them, and I got the job at a broker, and I never looked back. And I worked for that large broker. He was a $5 million producer, and I was one of his 4 assistants. And that's where I went from there. From there, I went on to another trading floor, and then another one. Yeah, whatever. But it all started with just watching on the news, and they didn't have, and you have to remember, when I was 5, there was no CNBC. That was 1979. And I was, the only thing they had was Saturday Night Fever, right? Disco and whatever. So all I could see was whatever was on the news, the paper flying. So that's basically what got me interested. I said, I want to do that. Whatever that is, I want to do it. And as I got older, I realized, oh, I can make money doing that. Oh, cool. All right. My story.
Thank you for that.
Are there any more questions? I think I've covered all the targets, and I've covered all of that. So basically, for the agenda is any questions on patterns, and then if not, I'll take general questions on trading, on anything. If you want me to plot some charts, different symbols, I'll do those too.
So far, there's nothing new. So if you want to continue with whatever you have planned, go ahead.
I have nothing else planned. I've covered a lot. I mean,
There's people typing. Hold on.
Yeah, like ask the questions. I can try to do some examples on charts. But if they just want, what do they think of this symbol, I'll do that too.
Someone asked a general question on how you chart Fibonacci retracements.
I do it automatically. I have code that's dynamic that automatically charts Fibonacci. I know there's some code out there for Thinkorswim. I took mine and massaged it a little bit, but like you look at, I'm looking at Oracle. I guess is this the latest Oracle? Yeah, this is the latest. Okay. So here on the 15-minute chart, it's drawing a bottom and a top, and it's doing it automatically and dynamically. I don't have to draw anything. The code is doing it for me. So I can show it on anything. So if I don't know, let's pick a random stock, Home Depot. As soon as I do that, yellow line is the top, yellow line is the bottom. That's the 0 on the 100, and it's giving me 23, 38, 50, 61, 76, right? As my Fibonacci is already set to go. If you look at this, in this specific example for Home Depot, it bounced and went all the way to 61. It didn't stop, but 61 was, if you notice, 61, 60, well, 62 when you round up. It acted as a resistance, and then it just kept on going. It was just strong. For me, I don't have to draw them, but if you are drawing them, you want to take, let's take this move here on the daily. It's the same Home Depot. You want to take a bottom, you want to take a top, then you get your tool. And toss, it has a percentage tool, Fibonacci Retracements under the arrow. Of course, TradingView has its own as well. But anyway, you take your thing, and then if I select that, I can pick the bottom, I can draw the top, and lo and behold, when I do that, it draws the lines right over the gray lines that my automatic dynamic one did. And so here we go, we hit a top. This is a very long, on the daily, there's a very long 1, 2, 3. Sure enough, it came down to 38%, came back to 23%, down through 28, came almost to 50, back up. Where is it going? Chances are it's going to go all the way back to 23. It's going to break out of this channel, and it's going to go up to here. I've been saying for a while, for those on the option swings, that the target for Home Depot is 322. I wasn't using Fibonacci, I was actually using something else, but lo and behold, there's your Fibonacci at 322. Okay, so there's likely where Home Depot will rise on its next move above on a channel. That's why it's good to have these. But for me, I personally, they're not my number one way of finding targets. I use other things. So that's why I've shaded them in darker gray, so they're not so prominent. Because if you shade them in yellow or red, your screen ends up looking like a grid. I don't want that.
Somebody asked or I read this wrong. How do you decide to trade stocks with huge gap ups like SWBI?
Okay, let's look at S. I don't even know.
It's
SW.
Smith and Wesson, yeah. SWBI.
Okay. Where's the gap?
Let me find it.
Is it down here? Is this what we're talking about?
I don't know if there is a gap. I'm not looking at the chart, but I think he's more so just trying to ask like really big parabolic runs.
Okay, so this is what I was saying earlier. So we'll say that what he's referring to is this, and I'm going to zoom in a little bit. This. Here we have a stock. Looks like that, right? So you know what? I will even, so don't get confused. Just the whole chart. The intraday. Here we have a sideways channel. Good example, actually, believe it or not. A sideways channel, I'm going to use tosses things. You can draw a line here. Okay, and we see that, but bouncing between the yellow. Okay. Sideways channel. And it does a breakaway gap. Actually a good example of a breakaway gap, right? And I said earlier that we want to probably try to wait just in case. I like to wait about 30 to 45 minutes to see if it's going to pull back. And these are 15-minute bars, and it turns out it doesn't. It doesn't pull back. It's just going to keep going. For me, I'm going to get a little bit worse of an entry on this if I was trading it at $21. But I would get in somewhere around here. And because it's a breakaway gap, I'm now going to look at my targets. Okay, so what's my target? So if I bring this back here, first target was the height. I could almost argue that this here is where the channel is. It's right up here. It's $20.82. The bottom is $19.54. So that first target is $1.30-ish. Okay, so where's it going to go from the breakout point? It's going to go at least to $21.30, and it's already done that. Now the next thing I'm looking at for targets is the width. Now I could argue, bring this here, just here. I could argue it was in a sideways channel for a while, but at least from here to here, okay? And what's the distance of that from here to here? If you're using your fingers and you're looking at the screen, you're going to say that distance is approximately, I don't know, $4 or $5, right? So somewhere up here. The distance from here to here is about at least here, at least there, and probably up here. Right? So it hit both targets on a sideways channel. It did a breakaway gap. There's no specific target on the breakaway gap. There's a target on the channel, and the channel, we had multiple targets that I gave you. It hit one and it hit the next. And it just kept on going. As you can see, it kept on going. Okay. But then you get another channel here, so that we can draw another line if we want. Get another channel right here. We get another channel. Sorry. We could even draw it here. We don't even have to use the spike through, as we were talking earlier, that it can spike through. So there's another channel. So now I have this distance. So the first target is going to be here. Look at that. That distance to this distance hit here. Next target is the width. The width is up here. You can see sort of what I'm doing, right? I mean, I'm just saying, okay, I got a channel. What's my targets? My channel is first the height, then it's the width. Stack them on top of it. Okay. That's how I would have traded. I would have probably bought 3-4 bars in, missed the first initial move. I'm okay with that because I want to wait for confirmation, and I don't mind missing a little bit of it. I could have also, if you wanted, waited for this whole move and then waited for the pullback. There wasn't much of a pullback. Chances are I would have missed it if I did that. I also could have used this as a resistance, these 2 points, and said, okay, once it breaks above there, which it does on the next day, I'm going to buy. I'm going to live with missing this move because I believe this thing is going parabolic and I want it to go higher. It broke above these two highs. It was in a little mini channel. It was a double top, a little mini double top. It broke above and away it went. I hope that helps. Now keep in mind over here, you can see it was earnings. It broke away on earnings. So I didn't even look at that. Knowing that it's breaking away on earnings like that, I might have bought even sooner because it's an earnings play. Waiting for the day after, it must have been strong earnings or something. And maybe I get in sooner. Maybe even on the first bar, depending. Does that help? I think it does. We have questions from others?
We have 2 more, and then we have some chart requests after. And this first one's up to you for answering. How long did it take you to be profitable consistently? Yeah.
About 10 years. About 10 years. And the reason for that is, without getting too much, nobody really cares too much of my journey. But the reason why it took me a little, the reason why it took me a little longer is because I was a little bit, I'm an introvert, believe it or not, I'm an introvert. And I was just trying, at first I was trying to find the perfect indicator. And let me tell everyone out there who's just starting, And anyone else who hasn't, who maybe been starting and been doing this for a while, there is no perfect indicator. They all basically don't work. They all have an accuracy rate less than 40-50% of the time. What you use indicators for is to give you an idea of where to buy. You use price to actually buy. If you like MACD, great. I'm happy for you. You like MACD. MACD, you're not buying when it crosses a line, or crosses another line, or when it crosses the zero line, or whatever. Your MACD is telling you, oh, it's oversold, oh, it's overbought. Now let me go look at price. That's what MACD is telling you. Stochastic, same thing. RSI, same thing. All the fancy indicators, Bollinger Bands, whatever, anyone, doesn't matter which one you choose. They're all telling you, oh, this here is in a possible overbought, oversold situation. Now let me go look at price. If I understand all the price patterns for reversals and continuations, I can look at the price and thus trade. So back to my story. Why did it take 10 years? I spent a lot of time trying to find the perfect indicator. It doesn't exist. And the next thing I did is realize I don't have the perfect indicator, and oh, I have to work too, because at the time I was still working. So what did I end up having to do? I tried my hand in Forex. And what that ended up happening is I ended up staying up till 2, 3, 4 o'clock in the morning trying to trade Forex. And I wasted about a couple of years trading Forex when I should have just been trading stocks all along. I was trading them on my investment account, like I was buying and holding. I wasn't trading stocks. I was actually trading Forex. So that took me on a 2-3 year sideways journey off to something else. And that's part of the reason why I never got into crypto, because I like my evenings, I like my sleep, and I like my weekends. So I've never traded crypto. I've traded every single thing else, futures, Forex, stocks, bonds, options, whatever. But I never got into crypto because of my experience with Forex. Because there was way too many nights I was up at 4 in the morning trying to trade my Forex account, and then had to get into work by 8 o'clock. And it just ruined me. So that's why it took a little longer for me to realize, yeah, there is no perfect indicator, and profits weren't as easy until that point.
Somebody asked, how do you pick a stock and how long does it take before you decide? Do you read the news?
Do I read the news? No. Could care less what the news is. I am not a momentum trader. I am not a news trader. I don't care. It's nice to know that a certain stock got upgraded or a certain stock got certain news. It helps, but I don't trade that way. What do I use? I use math lines, math statistic lines in order to trade. I'll show you an example. Here, let me bring up. There we go. No, I thought I brought it up. This one. It's over here. It's on. I have multiple screens. It moved over to the other side. Sorry. There we go. So I use math lines, statistic lines, linear regression, and standard deviation, normal distribution, and can't remember the other name of it. But basically, you see these lines on here. These lines help me to decide where the buy and sell signals are, and that's where you see these arrows. And then based on those arrows that you're seeing, so such as this dark blue one down here, just using the person who asked about SWBI, here's where I had a buy signal at the time. Then these lines were in a spot to create a buy signal. I would wait then for a price pattern or a price to confirm the entry, and I would buy. The confirmation came here on the break above here. But that's what I use. Just because I have arrows doesn't mean I'm trading. And I want to point that out because a lot of people ask me for charts, and I'm okay with that. Please just because you see all these arrows and you could say, holy crap, man, your system sucks. Hey, look at that. Sell, 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 sell. And up, keep it going, keep it going, keeps going. Sell. Like your system sucks, buddy. I don't know why you're even talking about it. Well, that's because I'm still waiting for price. It's just telling me, and everyone would agree back down here, let's just zoom in. It was this stock's, that's WBI, was trading down here and it was moving $1 up and down. And all of a sudden it's breaking out and it's moved $2, $3 and it keeps going and it's moved $5, $6. Everyone in there with any sort of smarts would say it's overbought, it's overbought, it's overbought. And that's all this is telling me. This is overbought, it's overbought. But it means nothing. It means nothing until price confirms it. So here it's overbought, will top, but doesn't confirm the breakdown as we talked about earlier. No confirmation, can't short it. I guess I have a bunch of arrows telling me it's overbought, but it's not. It actually breaks out the other way, which you end up seeing over here on the daily chart, and it keeps going. Again, overbought, 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 again overbought. Whole triple top, whatever, into a channel, doesn't break. It kind of broke down, kind of. I'm patient, and lo and behold, it backs back up, and it keeps going, right? That's what I use. I use math lines to give me the overbought and oversold. You could be, for instance, interested in MACD or RSI or whatever, and it would, of course, it would be down here on your chart. But it's just telling you it's overbought or it's oversold. That's all it's telling you. You must use price. I've seen Guru do this. He uses RSI and MACD, I believe, and he can correct me if I'm wrong. But then he waits for price, and he'll show his price patterns, and he'll draw trend lines, and he'll do whatever, and he's buying the breakouts. He's not buying the MACD going above a certain number. That's not what he's trading. Some of the other guys who are analysts here don't even have indicators on their chart. They just have price, and they'll draw their trend lines. I think, what's his name?
Hydra's really big into doing that.
Yeah, Hydra, exactly, Hydra. He does it huge. He does so many trend lines. The guy is bang on accurate. I'm just telling you, like, sometimes his breakouts don't work. Somebody was asking about that earlier. All he's using is price. He's doing continuation and breakouts, trend trading, not reversals. That's all he's doing. He's just drawing lines on his chart and saying, if it goes above here, closes above, maybe it pulls back, I'll buy here, whatever, and boom, that's it. Whether you're using MACD, whether you're using math lines or whatever, my math lines that I'm using, standard deviation, are not my entry. They're just telling me, oh, it's oversold. Oh, it's overbought. It's the price that's telling me my entry. Almost all the analysts that are on Xtrades are all using price. Almost. I don't think all of them are, but a lot of them are.
Somebody asked, can you run through stops where patterns are invalidated?
Run through stops where patterns are invalidated.
Someone said that, like, it wasn't explained on the falling wedges, channels, double or triple bottoms, and head and shoulders.
So if it's invalidated, where do I put stops? You would put stops at previous support or resistance. Hang on, let me draw. So you have head and shoulders. Breaks out. Does this. This is what we're talking about, right? I believe.
Yeah, I think so.
Somebody's typing yes. Okay, so where we put stops, right? So stops could, now it depends on the size of this, because head and shoulders can be really, really big. You could have a stop here, you could have a stop here, or you could even have a stop here. Okay, you're waiting for it to go above, close above. Okay, great. On a trail your stop. So depending on the size, this size here is 20 cents. Well, maybe you're not using this one. Just not. But if this size here is like you know, a good $2-3, then yeah, maybe your stop is there, or maybe it's down here where the last shoulder was, and it goes above. Hopefully, when it did this, just erase this a little bit. Hopefully, when it broke out, it did one of these instead, because then you could raise your stop here. Right? It broke above, it kept going, but it then invalidated. But you could have, you said, oh, look, I've stepped up my stops, and I can put it here. Right? Now, depending on the type of option strategy you're using, as Time Hawk described in his butterfly session on Saturday, and I do encourage you to please watch that if you're interested in option strategies, or even if you're not, you'll learn a lot. Depending on the option strategy, you may not have a stop loss. Stop is simply the price that you paid, because you're buying a hedge strategy already, buying a butterfly, which is already much cheaper. So a butterfly pattern, B-fly, would cost you something, let's say around $3, whereas a regular long call on, say, something like, I don't know, Netflix, it costs you $7. This stop here, or here, or here, or here, is probably somewhere around $3 to $4. You get out with $3 to $4, meaning you lost $3 or $4. The butterfly, or similar patterns, if it did this and went to zero, you lost $3. So depending on the type of option strategy you're using, and if you're using hedged ones, which involve selling options and buying options, you may not have a stop. However, if you're trading just regular long calls, long puts, nothing fancy, plain vanilla stuff, yeah, you would trail the stops as I showed here on the head and shoulders. On the cup, you can do that one. On the cup and handle. And the cup, you do this, you buy at 5 o'clock. I talked about if it goes like this, it's probably going to go down. You could also set your stop down here. And then trail the stop, because the let's get rid of this. Cup is going to do this, right? But it's not just going to go up, it's going to do these little mini ones, right? So you could trail those stops here to here to here to here, you know, that kind of thing. Just keep trailing them up, leaving a little bit of distance. Like you notice when I'm drawing my lines, I'm not drawing them here. I'm drawing them a little bit below. So that's a key distinction. Okay. So down here, I'm leaving a little bit of space. A little bit of space. See? I'm not putting my stop right on the line. Because what ends up happening is, as you know, market makers like to hunt for stops. The algorithmic trading will hunt for stops. You want to add what I was taught, they called it fluff. Fluff. Spelling it out for you in case you don't understand what I'm saying. Fluff. So if your bottom here, let's say, is $50, here is $50. You want to add some fluff or some extra to it so that you don't get triggered on one of these little jerky moves. So I might, depending on the stock, if it trades not very volatile, I might make my stop 49.80. I've added a little 20 cents of buffer or fluff, buffer too, to allow for my stop not to get triggered so easily. Same thing with an option. And the option makes it a little bit harder because you're using the option price, but you want to add a little extra. I know Kevin has asked me to do a whole session on position management, money management, whatever, and we'll do that. But basically, if you're trading stocks, you should have a 10% stop loss. If you're trading options, options should never lose more than 30 to 40% as a stop loss, unless you have a specific hedged option pattern. Okay? But if you're just doing regular long calls and long puts, should be around, your stop loss should be around 30-40%. If you're doing stocks, it should be 10%, and you can use these bottoms as a way to do that. What other pattern did we not give stops on? The rectangles or the channels.
The four that they said that weren't stated were falling wedge, channels, double or triple bottoms, and a head and shoulders.
Double or triple bottoms. Okay, so the double bottoms and triple bottoms are simple. You want to sell here. Doesn't matter whether this is a double or triple. This is your stop. You put it again. It's similar to it's similar to the one I just drew. Like you have support. Right? The other ones they were rising, right? They were support. But you want to put them just below. Give it a little bit of buffer, a little bit of fluff, or whatever you want to call it, to allow for for a little bit of a spike through. Not a lot. That's depending on, like, if you're trading, for example, if you're trading a stock that's $50, I think Delta or something like that is trading around $50, then your buffer could be, like, say 20 cents. If you're trading Tesla, 20 cents is nothing. Right? If you're trading Tesla, you want to have a buffer, let's say, of $2, $3, $4. Right? But you're providing a little bit of buffer. So if you have a double bottom, triple bottom, it's the same thing. If you have a channel, the channels like this, same thing. Goes below a certain amount, that's your stop. What was the other ones they said? Riley? It was Riley, right?
Yeah, my name's Riley.
Yeah, okay, right. Sorry.
You're good. The last one was head and shoulders.
Head and shoulders I just did. But I'll quickly do those again. Head and shoulders I just did. So you do this, or even this. Your stop is here. Let's do this. That's your stop point. Excuse me. Stop is just below the shoulder on the inverse and just above the shoulder on the head, the proper head and shoulders. Another one?
There's no more patterns at the moment, but this is going back to your math lines question.
Sure.
Do they refer to the same thing as pitchfork? He thinks those work around standard deviation if they're not mistaken.
They don't use, I don't believe Pitchfork uses linear regression. My math lines use linear regression plus standard deviation. So, yeah. Let's bring. I don't know. I'm searching for a stock. Okay, so let's use the daily on Netflix. The linear regression line is the blue, or sorry, not blue. This is cyan or aqua blue color. Also here. Okay, that's linear regression. Standard deviation is the purple, red, blue. This is one standard deviation. This is two standard deviations. This is 2.5. That's what I'm using. Here is telling me now that Netflix on the daily chart is overbought. Doesn't mean it won't run. When we look at the intraday, it's just above linear regression. This thing could keep going, which is what I showed earlier, where you can even here, you see it on the daily. See a sell signal, sell signal, sell signal, and it still went higher. Over here on the intraday, sell, 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 sell. They're not sell signals, they're overbought signals, and it just keeps on going. A pitchfork, as I understand it, and I don't remember 100%, but I don't believe it uses linear regression in order to formulate it. I believe it doesn't. It uses standard deviation for the outer edges of the pitchfork. You have to draw the line itself. You're drawing, in my case, I'm not drawing anything. Math is drawing the center cyan aqua blue line. Linear regression is being drawn for me. Whereas in a pitchfork, you're drawing the line, and then the outer edges of the pitchfork are standard deviation. So it's only using half the equation. Something similar is Bollinger Bands. So Bollinger Bands uses standard deviation to build the bands. What it fails to do is it uses moving averages as your center line. Moving averages are the slowest indicator on the planet. So that's what's wrong with Bollinger Bands. It's not that it doesn't work, and not that standard deviation is not good. It is. It's just not as good as linear regression because you're using a moving average for your center line.
We don't have any more questions at the moment, but we do have 2 stocks listed to chart. Let me see where they're. One of them is going to be Twitter, and the other one's going to be MRIN.
Twitter. Right. So let's just do a little bit of a zoom in here. All right, so now we have our intraday chart and we have our daily chart. So on the daily chart, we are still in a breakout strong pattern, whatever you want to call it. It did try to sell off, but then held the green line. The dotted green line here is the 21 daily moving average, EMA, and the purplish, bluish, grayish color there, 50-day daily EMA. It broke above those and held and kept going. So in theory, there is a resistance here that it's been holding. In theory, Twitter should keep going when I look at the daily chart. If I look at Fibonacci, just to throw it out there, Fibonacci has come up to 61%, but there's another target up here at 78%. Now, when I look at a intraday chart, it's showing that same strong move. It has a number of overbought signals, but it's never confirmed until you have price. It did a top, and let me just zoom in a little bit here, just to move the arrows a bit. It did a top, down, a higher top, thus invalidated a double top, invalidated a 1, 2, 3 top because this is now the new top. So this becomes your new top. It comes down, it comes up. Now, this is where it gets a little tricky. This day here, it gapped up, then and down. For the person like me who's waiting, I don't view this as a gap or as another top or anything. I view this more as the top because it didn't last very long. It lasted 20 minutes. 20 minutes of up and down it goes. So I have a 1, 2, 3. Okay. 2, 3 top. Then I do have this point, this point. I have this point even though it's not very strong. So then when again, here's the problem. If I'm zoomed in, I don't see the whole picture. I'm thinking, oh, if I'm zoomed in, I got a 1, 2, 3 top, held, whatever, broke down. Okay, go short. Okay. When we zoom out, we see a little bit more of a picture. When we start drawing some lines, we can draw some trend lines here too, right? Go, okay, here's my top. Here's my other top. Here's this. And there's that. You could say I drew that wrong. So let's remove that drawing. Draw through the lines. It looks like this. This is what we talked about earlier. Someone was asking if it peaks below, pierces through but then ends up closing above. This is a perfect example. So Twitter pierced below, and at first I drew the line here, but now when I looked at it and I drew back enough, I'm able to draw my lines through that piercing, but still obeying where it closed at for those 15-minute bars. And what I end up having is I have a channel, and when you zoom it even more, I have actually, which we will discuss next week, I actually have a flag. Sorry. Let's get rid of this. See that? So I have an up, I have a flag. So I won't get into the targets of a flag because I want to save something for next week. However, overall, the answer to this, Twitter is bullish. It should keep going after this flag pattern is done.
The next two tickers are MRIN and BABA.
MRIN. Marin software?
Yeah.
Okay, so just so you know, for everyone's sake, I don't trade penny stocks. I don't trade small stocks. Everything I buy is over $100. It's just, why? People ask me this all the time. The answer is I don't want to have to worry about the fundamentals. However, I will answer the question. What I see here, the intraday data really doesn't show it very well because it's so tight, but the daily shows it. You have this long sideways channel. You can argue that it's like a triangle, but really it's a channel. You have a bottom here, you have a top there. I'll draw a line just for the sake of it. Right, this is a sideways channel, long sideways channel. First target, what was it? It's the height. Height, we bring it here. It did that literally on the first day. Next target is the length. Well, that's a little bit different scenario. Here we have from March to June where it went sideways. So when I stack this distance, wish I had a little measuring ruler, but when I stack it, I'm up here somewhere. It's about roughly around here is the height. So it's hit the second target. As of right now, I have to go intraday in order to, because the daily chart's telling me nothing as far as whether it's over or done. It's just telling me it's mooning. When I go intraday, I go up to here. Besides the fact I've got all these overbought signals, of course I do because it's so high up. I have a top here, came down, came here. It looked like it confirmed 1, 2, 3 top. Come down, so it didn't confirm it. And then this price here closed above, thus invalidating this top. So now all I have really is a single top. It's overbought. It's a single top. And until you get a top pattern on the price, all I can say is this likely keeps on going. I know nothing about this company, so I can't speak to it. That's the reason why I trade $100 stocks, because I can tell you fundamentals about some $100 stock. I can tell you nothing about Marin software.
The next ticker is BABA.
Good old Chinese stocks. That's another thing I don't
China's
trade.
taking a dump. China's taking a dump right now too.
Oh, lovely times. Okay, so overbought, double top, 1, 2, 3, double top, declining double top. Right there, I see it. 1, 2, 3 top. Blows below here. If it goes below 226.50, it's going down. It's going to fill the gaps. I'm able to do this really, really quickly. I just try to whatever, but when I look at volume profiles and whatever on the daily, it's up near resistance. There's some resistance here. You can see it. Resistances came down, whatever. It's up near resistance. That's why it's probably slowed down. It's overbought. It has a 1, 2, 3. I would not short it until it goes below 226 because it could go higher. Right now, it's still a buy. but it's on the radar for a possible short. And if it does, we start to look at what will happen. And what will likely happen is gap fills. So it probably is going to target this gap. And if the market gets really, really negative, it might even target this gap down here. At the very least, it could do a 50% retracement, which my automatic dynamic thing is not showing it yet because of how it's designed. But a 50% retracement, 208 to 230 is $22. So $11 move from 230 back down is 219. Oh, look at that. There's the gap at 218. 50% retracement. If this ends up being a top and it gets confirmed, BABA will drop to 218 and close this gap and do a 50% retracement. There's your target. Pretty simple and fast once you get a hang of these things.
We got 3 more, so I guess the charting requests are coming now, as normal.
That's fine.
Disney,
No worries.
yeah, PLTR, Disney, and Roblox.
PLTR. The PLTR, looking on the daily, has broken up above this point, but still has that one, actually 2 times. I remember watching it a few times. That $28 level, 27 and change, 28 is a strong level that it needs to break out. Looking at the intraday, yeah, it was overbought for a while. It's no longer overbought because of this sideways movement that caused the lines to shift. So now we just got a top, but we haven't got a breakdown. So I would say PLTR, it probably will at the very least attempt to break out of the $28 level. If it fails, it's at 27.38, right? If it fails, then it will come back down. Again, you can't really trade that until you have a price pattern confirming the breakdown. If it goes to 27.50 and comes back down, it's more than likely going to come back down. And then you have to look at where could it pull back to? Well, this breakout of the last major sort of channel is here. It's right here. This stuff. If you look at this little, you can't see it as well without drawing lines, but if I draw a line here, right, now you can see it. There was this glut of trades in here. That's what this is. So likely what could happen is you have a channel. What you could have here is a channel breakout, broke out and pulls back, whatever percentage of the time, back to the line and then goes. Yeah, you can see the lines here that I just drew on the intraday. Okay. The channel broke out, it may pull back to the line and then go. Right? Pull back here and then go. But it could still keep going. It's very possible. If it breaks this $28 level, which is proven to be, and there's also a gap back here. You know, if you can see it, let me here. To zoom in. There's this gap right here. Very small gap. 28 level is proven to be a sticker for PLTR. So there's 2 possibilities here. One, it pulls back to the breakout and then bounces and moves higher. The other thing is it just breaks out at 28 and keeps going. We won't know it happens until it happens, and then we start to look at other things. And the next thing that pops up is there's a gap here. 30. If you're using just the wicks, it's 3.5 to 31.39 or whatever. If you're using the bodies, then it's a little bit bigger gap. That would be my next target on a breakout of 28. What was the other one? PLTR and Disney, I think I heard.
Yeah, the next one, how do I tell you the list? Disney, Roblox, Spotify, and AGTC. So for now, Disney.
I have Disney on the chart. Just fix this. All right, so yeah, see how I back out because this is a channel. It's a big one, but it's a channel. It helps that my lines sort of pop up and tell me these things. So I get a little bit of advantage that way, but this is effectively a channel. It was overbought. It bounced. It did a 1, 2, 3 bottom, broke above. Here it does a top, and now we have to zoom in to see it. There's a bunch of tops. There's a higher top, and then broke down. Right now, this is a sell. It's a sell for two reasons, because you have a 1, 2, 3 or double top breakdown. Came down, then pulls back up to the breakout point and drops again, just confirming yet again that it's a sell. And it's also a sell because it's in a channel, and at the bottom of the channel, top of the channel, bottom of the channel, top of the channel. My first gut feeling on Disney is this is coming back right back down to 172. Now, could it stop somewhere else? Sure, it could. Fibonacci, for example. Here's the 0 line. There's the 100 line. What's 50%? 50% is where it stopped on this drop. It pulled back up to 78. Where's it going to go next? It might go right back down to 38. So there's 174. Which there's another small little mini support there and a resistance there. So 174 is possible. Also, 173 is possible. We have a support, and kind of a little thing here. But overall, Disney is a sell. It's a sell with likely either to hit 175 again, 174, 173, or all the way down to 171. Roblox, RBLX, right? I don't trade it.
Yeah. He said specifically as well how you feel about the cup and handle possibly on the 1 hour.
Handle on the 1 hour. I see what he's talking about. Here's looks like a kind of a cup, but it looks like a shot glass on the daily. So let's go to the 1 hour. Are we referring to this? I'm guessing that's what he's referring to.
Yeah, that's the only thing I'm seeing.
Yeah, the shot glass. This is a little sharp. However, I mean, we can still use the rules. What are we buying on a cup? We see the cup coming down. At 5 o'clock, we would have bought here. Okay, the 5 o'clock on the patterns, we would have bought. Now, if I look at the regular patterns, I got a 1, 2, 3 break above. It just so happens that that break above area, there's another top here and here. One, whatever, you can count it or not count it. It's up to you. But basically, here is your breakout point. And it's also your 5 o'clock point on your cup. Who would have bought? It just so happens that the cup did not end up going sideways here. It kept going. Great, awesome. Now, what do we remember? We remember from our cup patterns that 74% of the time, I believe that was the number, just double check. Yes, 74% of the time, a cup will pull back. What does that mean? That means if this is a cup, 74% of the time, here's the top of the cup, which is where it basically hit. It's going to pull back 3 times out of 4, quarters of the time. When it does, you want to buy on the 5 o'clock point of that cup, and then the breakout. So what's the breakout? If this is a cup, and everyone agrees it's a cup, and the target, $80 to $94.50 is $14.50. The target that's on the breakout of $94.50 is $14.50. That's the target. However, the target on a cup only hits 37% of the time. Keep that in mind. However, see what he's saying. It's a little bit sharp of a cup. I prefer to see cups more rounded versus V-shaped. This is kind of what it looks like, a V-shape. I mean, you can sort of zoom in a little bit on the 1 hour, but it's still V-shaped. But yeah, there you go. Buy here. for pullback, buy there, breakout, target 1450. What would that be? That would be 98. That'd be 109.
That's so
109?
bullish. Oh my god.
Yeah, so bullish. If I was trading this as a cup and I thought this was a cup, yes, I would wait for the pullback and I would get out 103. I wouldn't wait to 108.
Your next ticker is Spotify or Spot.
Spotify. Yes, another one of those breakout stocks. I actually did mention it was breaking out way back here. I don't know if anyone listened, but yeah, it's overbought, but it's breaking out. I have no reason to sell this. And there's a top here. It's likely to, again, unless the market goes negative, it's likely gonna keep going. And where is it going? It looks like it's going at least a 50% retracement, which happens to have two tops right back up here at $299, so $300. If the breakout of Spotify was 252, it looks like the target is $300 if you have a long enough expiry option, which we won't talk about how you need to have longer expiry options and not 1 week.
Yeah, the rose 6 weeks. Come on, now we're learning from Big T.
Yeah, exactly.
Yeah.
Yeah, no 1 week options. Unless you're
The
day
next one-
trading.
Sorry.
I don't go ahead.
The next one's AGTC.
GTC. I've never heard of GTC.
Neither have I. It's my first time hearing about it.
I don't know what can I say. It looks like a sideways channel which had a small peak above and then came back down. I actually did it twice. I see the first thing that jumps out at me when I look at this is a sideways channel because I see bottom, top, bottom, top. Didn't quite go so much. Came up here, peaked a little above, back down. It looks like it might be doing a double bottom with a higher bottom, so a triple bottom. So you have 1, 2, came down here. I wouldn't buy this. If you don't already own it, I would not buy this until it clears this level. You see this here? It just so happens this is the same peak it came. So that's 460. If you don't own it, I wouldn't buy it unless you want to trade the channels, which you can. You can trade the channels. So then what would you do? You'd wait for it to come back down to 350, buy it down to 350. Just trade the channel up and down, up and down, and up and down. If you're a breakout player, if you're a trend trader, a continuation trader, you'd wait for the breakout above 460. And then where does it go? Well, again, first target is the distance, 350 to 465. So that's $1.15. So the first target would be 580. I can't even show it on the intraday. Here, 580. So first target would be up here. And there's the distance or the width of the channel will become the height. So then we're talking about $7.50, $8 maybe. That's where the next targets would be. Looking purely at the chart, you can see there's a target here. Sorry, a resistance here, not target, a resistance here. You can also see resistances here. So it could reverse at these levels, this level or that level. But yeah, if you're trading it, if you already own it, great. It's not going anywhere until it breaks out. If you don't own it, either buy it at the bottom or buy it on the breakout. Another symbol?
AMBL.
Great.
Amble. AMBL.
AMBL?
Yeah.
Can't find the symbol.
That's interesting. We'll move on from it for now. Yeah. Oh, ABML. My bad. They mistyped it.
ABL.
Or I mistyped it. That's my bad. That's my bad.
That's okay. Another penny stock. This is the penny hour.
It'll change after this one.
That's okay. All right. Do you know, without getting into the stock, you notice what I'm doing here? Like you're the only one that can comment, but if you notice, I had this, and I'm like, I can't really judge what it is. Okay, and I'm zooming out. Please do that. That would be one of my biggest tips for chart patterns or chart looking at charts. Period. Zoom out. I said it earlier. You know, go 40,000 feet, 30,000 feet up, and just see kind of what's going on. You don't see it when you're here. When you look at a chart like this, you could say, okay, I've got a double top, maybe. No, and I kind of see whatever. But when I go zoom out, I see a little bit better picture. I see a single bottom, came here, came down, did a 1, 2, 3, finally broke above, and went into another channel. It used previous points, previous support, and previous resistance in order to build these patterns. 1, 2, 3. This 3 matches levels here and here. Then when it broke above, it used this level in order to build whatever. What I see here is I see a stock that's overbought, forming a possible top pattern because you have a 1, 2, 3, but it hasn't broken down. Until it breaks below $2, it looks like $2 or $1.99. Until it breaks below this point and this point, it will probably keep bouncing in this and break above and go higher. But if it breaks below $2, it's likely going back down to $1.50. It's a channel, possible top. So if you're looking at also, for those of you who look at my little chart that I post on watch lists, I've been posting on watch lists since I had my promo. You'll see I'll say a top formation is forming, or a reversal pattern may be forming. That's what I'm referring to. Something like this. You have a top, a bottom, a top, a reversal pattern may be forming, but until I get a price confirming it, it's not an actual breakdown. It's not an actual top. Maybe a top. But hopefully when you're hearing that now, you understand what you read when you see my Excel spreadsheet signals. Symbol.
Baidu. Baidu.
All right. Oh yes, the one of the ones that was hammered on that March drop. Not as much as others, but single top. This is and this goes back to what I said earlier. Okay, here's a good example actually. Just zoom that in a little bit, and we'll bring up this. We'll put this side by side. Clear this. Right, so what do we have here on Baidu? We have top, came down, and then it's done this little I don't know how to call that, a little That's what it's done here, over here, this little So, is that a top? No. So don't treat it as a top. Just because it did a little small little down bar, red bar, green, whatever, down bar, doesn't mean that this is a 1, 2, 3 top. It's just not. You need more pattern. You need to see here, like if I was to draw it, I need to see another line and another line and another line. And then I still need a break below. Sorry, that didn't come out as straight as I was hoping. Here. Still needed to break below. Close below. And I have a pattern. Okay, now all I have is a single top. I wouldn't even call this a 1, 2, 3. A 1, this is not a 2. Maybe a 2. I don't know. It could end up dropping. It could end up just dropping. Look like this. And then this is my 1. And this is my 2. And then up it goes. Right? And then it creates this. And then I have a 3. Or I have a double top. However you want to look at it. Doesn't matter. Right now, this is nothing. This is just a single top. It should keep going. It's just bounced. When I look over here on the daily, without even looking at the daily, now that I've looked at the daily, I can see that. Here we have a breakout. It is broken above this point, which is a 1, 2, 3 breakout. That. Okay. And it closed, did it close above? Closed just above that. Okay. Now, how do we trade it? We could wait for the pullback. Okay. We talked about this earlier. We could wait for the 1, 2, 3 small pullback. So maybe it comes back down here and holds. We can just buy it. Right now, Baidu is a buy. The 1, 2, 3 breakout, both on the daily, on the intraday, it's a buy as well. Where is it going? Well, let's start looking at targets. Here, possible. I also use my math lines for targets. So if I was looking at intraday, I'm looking at least up to 211, 212. And yeah, I don't want to get too much into my system because my system is irrelevant. We're talking about price patterns. So yeah, we're looking at targets around here. Here. And then there's also the 50% retracement, which would be way up here. So, or maybe no, that's 38. Wow, 50 is way up here. Jeez, yeah, that's possible. Possible, not likely, not at least not on the first run, but possible. Right, next one.
Snapchat.
Right.
Snapchat, our good old Snap.
Yeah. Anything over 100, well, 66. I know the symbol. Jeez. I want a dog's breakfast. Notice I keep going, zooming out. Big ass channel. Sorry, I should say ass.
Ooh.
Big channel, big large channel. Formed. Big large channel that formed. Traded the channel. It looked like we have a channel breakout. It came back down to the breakout point. Look at that. We zoom in. Oh, it breaks above. Oh, it comes back down and retests. That's why we wait. Now what happens? What happens likely is after that support, if it holds, likely will run up to here. If we look at the channel height, it goes a lot higher. The target on that is a lot higher. We have $48 to 65. That's $17 move from 65. So that'd be 72, 82 is where the first target would be on this channel. When I go intraday, yeah, it's the same. $82 is the first target, although the first target in my mind is 73.59, which is the all-time high, or at least the 52-week high. That's where this goes. And as long as support is held, support starts to get violated. If it's only a little bit, because it can happen, and I mentioned that before when I was drawing. Let's bring this back clear. When I was drawing, we could have this channel break above and then come back down and do this. So it doesn't have to hold. You can go a little bit lower, not a lot lower. So as long as we're in the, let's say $62, about $3, as long as it doesn't go below here, it should keep going up to 73.50. Potentially hit the targets of the channel, which are much higher. I didn't even look at the width. The width is even higher. I don't even know. Does Snap have a higher price?
No, that's the all-time high.
Is it? Oh, okay, yeah. So then, yeah. So yeah, that's. I think Snap is going to keep going up to this high at least. But again, it all depends on what it does here. If it holds support. A good
Your
place to
next-
buy too.
Sorry.
It's a good place to buy. I was just gonna say, like, as long as it's holding, it's a great place to buy. Like, you haven't missed it. Can't say, well, you know, it would have been nice to get it back down here if you were trading it. If you haven't been trading it and you're a trend trader, great place to buy as long as it holds.
Yeah, I took 716 swings today, so I'm excited for it. You just made my heart
Maybe
happy.
as long as it holds in this,
Yeah.
like you said, that Chinese or whatever the hell's going on overseas is no big deal.
The next one's gonna be Boeing.
Favorite of many.
Yeah, man.
Boeing has held 21 day. You don't see it here. Yeah, I was holding these lines before. Let's just look at it now. So in the daily chart, I have a declining top. 2, 3. On the intraday, obviously, is a little bit different. You got to buy down here. You got to sell here. If we zoom in, you see a top, a bottom, a top, and a drop, and a breakdown. And then you see a gap down. It's a sell. Has a gap. Do the sell. The only thing I would add as a caveat is that it traditionally likes to hold its moving averages, and that's why I was mentioning that earlier. It likes to hold the moving averages. So both 50 and 21 daily EMA holds them. It's held them here, held it here, even though it went pierced through. It held it and then broke down, right? So again, now we have it coming back down in the moving average. If you're long, attention. If it breaks below here, it's going a lot lower. If you want to go short, you kind of missed it. You're gonna wait for a retracement, because you should have shorted somewhere here. Or if you were patient, you waited for the pullback, as we talked about, and it pulled back to here, and you went short there. There's another way to play it. That's why I like pullbacks. I really love. That's what I do. That's why. Just to clarify that, that's why you'll see a lot of my signals and say, oh, you know, such and such stock is oversold or overbought, and you don't hear me talk about the stock again the next day, the day after, because I'm waiting for the pullback, and that can take days. And I even mentioned it in my note when I send my alert. I said at least 2 to 5 days for it to develop. Sometimes it takes even longer. I just prefer to wait for pullbacks. Just more reliable to me, and I don't mind missing this move. Now, a breakdown, trend following person. I'm not picking on Hydra, but let's use Hydra as an example. He might have had a trend line here. He shorted here, and he made a ton of money, which is awesome. Great, it's perfect. And anyone who followed it, I don't know if he did or not. Let's use ABC analyst, whoever that is. A random analyst in Xtrades could have had a breakdown here, and then they made a ton of money. Just for me personally, I prefer to wait for pullbacks. So I wouldn't have traded this. The only way I might have traded this is if I somehow was watching at this point here. Maybe I grabbed it. I don't know. I probably would have been the guy who bought it here. Shorted or bought puts here. It's just me. There's nothing wrong with my style versus someone else's. It's just different. As long as you learn how to use price. Both reversals and continuations. Any other symbols?
The next one's gonna be low.
So similar to HD, right? I think that's what someone said today. Really? not really close to HD. I'm struggling to call this a channel because this is really a lower bottom. It's not really a channel. Like you can see it more here in the daily. This is a lower bottom. This is a 1 bottom. I don't really see a 2 here. It's hard for me to see. I mean, this is 15-minute chart, and I still don't really see a spike. Is it breaking out of this level? It could. If you ask me, this looks more like a potential double head and shoulders. I mean, the head is really small. See a little line and a little line here. Could be a double shoulder, but only single head. But here you have a shoulder, a head. I would say it's possible that this could come back down here and do 2 more shoulders. It's not really a 1, 2, 3 bottom. It's not a double bottom. It's not a triple bottom. It's not a channel. It's not a maybe it's a stretch, but maybe it's a cup. Maybe you have this kind of curving format. It's kind of a stretch. It's a stretch to call it a cup, but I see no pattern here that is so strong that says, oh, that's this. I just see a potential double shoulder, single head pattern, or a possible 1, 2, 3, and then breakout. It's hard for me to call it a channel. It's hard for me to call it anything else. On the daily, on the math lines, we're getting some buy signals here. It's very messy. It's not clean. I don't know what to say. I love for it to be a breakout because it's similar to Home Depot, and I own Home Depot. I don't see a breakout yet. Maybe if it goes above here, then we can call it, I don't know, maybe like a small cup. This pattern here, which you would have bought down here on a cup. Right? This would be like a little mini 1, 2, 3. Very small. Zoom in. 1, 2, 3. And you would have bought on the breakout here, which is the 5 o'clock point on a cup. But it's not clean. So wish I could give you a better, or give whoever's asking a better answer, but it's a messy chart. It's not to say it won't break. It could very well break and go right back up to here. It's just not clean. It's not something that I would personally say, oh, I love that chart. That chart is awesome. Let me buy that. No, I don't love it. I don't really know what's going to happen. Next one.
The next one's going to be X.
Another popular ticker symbol.
Yeah, this thing got beat to the ground.
I don't know why everyone loves X, but anyway, I never quite got that. Maybe it's just the idea that it has United States in the name. I don't know. Buy signals on the math lines. 1, 2, 3 kind of format, or even here 1, 2, 3. Held some. It looks like it's holding some supports, although it does have to get back above the 21 daily EMA. Is also here on the daily and here on the intraday. I think if it can hold this support and go and start to make its way back above into like high 23s, 24s, it'll likely keep going, go right back up to here. It has to hold. The only pattern that I see here is a 1, 2, 3, either 1, 2, 3 here, or if you want to be more backed up or zoomed out, then 1, 2, 3. It cannot go back down. If it goes back down, it'll likely break down. And then we'll start to talking about these levels, $20.50 or on there somewhere. It has to hold support. Next one.
This one's gonna be our fan favorite. The crowd loves this one. Give it up for Tesla.
Oh yes, Tesla.
Oh yeah.
Tesla, I own shares, so there's my disclaimer. I have shares in it. I do not have stocks, or sorry, I do not have options. Zooming out, you see the nice double bottom. The intraday from March to May, a nice double bottom. Yeah, March to May. There it is. Looking at, without drawing trend lines and doing continuation patterns, breakout patterns, or breakout, without doing the breakout patterns, I want to save that for next week. You have a 1, 2, 3 bottom, 2, 3 bottom. A 1, 2, 3 bottom. There's actually, I see 2 other patterns here. They're both breakout patterns, not whatever. So you actually, interesting. You have a continuation. That's what it's called, right? I'm just double checking my notes. A continuation gap. So we're going to talk about continuation gaps. It'll be interesting to see where Tesla is next week, because continuation gaps are the only gaps that have targets. So if this is truly a continuation gap, it's going to be fun. But yeah, it's a breakout 1, 2, 3. It should keep going. The only thing holding it back right now is the fact it looks like a 1, 2, 3 top. As long as it doesn't violate this level, this gap, this level, as long as that doesn't violate, it should keep going. In fact, it bounced here. I don't know. Again, it's only 3 bars, so we'll have to see. But it's a breakout, and we know $700. Everyone who trades Tesla knows $700 is a key level. It has been for months. It's just, look, 700 broke out, came down, played around in 700s again. Did the 700, went down, went above, did 7, broke below. 700 is a key level. So as long as 700 gets broken, we're looking at potential revisit of 780. That's what we're thinking. That's what I'm thinking, 780 revisit, as long as support gets held. Can it go above 780? Well, yes, it can. You just have to see what happens when it gets there. It's probably going to need some sort of boost at the open. Break out at 805 or something, crazy like that on the open. Anyway, for now, we're talking about a stock going up, breaking above 700 and keep going. Next one.
All right, so this guy requested 3, but I'm only going to pull 1 to keep it a little bit more fair, to give everyone a chance. A lot of people have been talking about this because of Hydra's analysis on it. Could you do Beyond or BYND?
Okay, so before I even open the chart, I want to give a disclaimer. And the disclaimer is I have no idea what Hydra's been saying about Beyond. I think I read somewhere he's saying it is breaking up, blah, blah, blah. I don't know. I haven't even looked at the chart.
It's just
If anything I say is different than what he thinks, that's just my opinion. Okay, so I really try my best to not put one person against another in their analysis. I oftentimes will not comment a stock that another analyst is recommending, because I don't want it to sound like I'm trying to one-up them or give a different viewpoint that's whatever. So with all that caveat said, let's look at beyond. I don't know whether I will agree or disagree with his analysis because I don't even know what it is. All right. So let's just, one thing I want to say, a flag is a continuation pattern. That's next week. Okay. For starters. We do have some overbought signals on the math. We had a top this top got invalidated. So this became the next top. It has done this pattern 1, 2, 3, 1, 2, 3. It did rig below these points, potentially being a short. This is why you also need to understand continuation patterns, because even though it is potentially a breakdown, it's not, because of the continuation pattern. I see what Hydra is talking about when you said a bull flag. I'm going to put this on the whiteboard because it's easier to draw. Oh, on the screen. Paste. All right. That's Oracle. That doesn't work. I don't know how the hell I got Oracle. Undo. Let's try that one more time.
For some
Yeah.
context as well, his price target on Beyond is 165.
165. Okay. All right. I'm not going to get into the target of a flag until next week. So I won't say what my target would be. I will next week when I talk about flags. Somebody remind me to look at Beyond flag, and I will we'll talk about it. Let's just see if I can get this to put on the whiteboard. Is that right? Yeah. Excellent. Okay. Yes. So drawing lines, red. Do this. So triple bottom. 1, 2, 3. Okay. 1, 2, 3. And we can call this a channel. It's not really a channel, but we can say this is a channel here. Or we can say a break above this point. Either or, doesn't matter. And it breaks away, and it does a breakaway gap. That's what this is. It broke out of the channel and it broke away right on the open. So we showed another stock earlier. I can't remember the name. But you would wait, and you're probably getting in somewhere around here, roughly. Or potentially right on the open if there was some sort of news that caused this breakaway. I don't know. Whoever knows Beyond would know. But anyway, there's the breakaway gap on the 1, 2, 3, and then you have this big push-up move, and this is what Hydra is talking about. You have a flag. If you look on the daily, the big push-up move. I know my lines are not the greatest, but you get the point. It's a flag, and it broke out of the flag. This has a target. What did you say his target was? 65?
Yeah, 165.
I will discuss the targets next week, as I said. However, his target is too low. It's higher. It should be higher. It should have a larger target than 165. Yeah.
That's just his first price target for context.
Okay, well then that's good, because without getting into targets, without saving something for next week, yeah, 165 is bare minimum. If this flag flag here, whichever side you want to look at, if this actually plays out the way it should, this is going much higher than 165. And it would be interesting to see where we're at next Friday. We can talk about it. So you know what? I'm going to make a mental note of that. I'm actually writing this down. So flag pattern, I want to look at bond. And for the continuation gap, we want to look next week at Tesla. I don't know if there was another one we mentioned. I think there was another one we mentioned earlier to look at next week to see what it's at. But at least we got two of them, flag and continuation. Yeah, so yeah, this is definitely, I agree with Hydra. This is a flag breakout, 100%. And there's where knowing all the patterns matters, because if you just knew your reversal patterns, you have a 1, 2, 3 top, break down, okay, I shorted. And you'd be like, today, you'd be royally pissed off. You'd be like, okay, what the hell? I took the 1, 2, 3 breakout just as BigT4X said, and it should be dropping, and I should be making a lot of money, but now I'm getting killed. What the hell's wrong with him? Because you didn't wait till next week when you get the flag patterns to tell you what happened. That's why you need to know them all.
This is something that can help out. This is more like me telling you to tell other people. But when something breaks out of a bull flag, do you like to wait for that confirmation of the back test first?
Not so much on a bull flag.
Okay.
I will get into what you wait for and what you don't wait for. So we'll go through a bunch of continuation trend breakout patterns. Bull flags are one of them.
On that note, your next ticker is going to be V.
Visa.
Yeah, Visa. And you could also, if you could look at it for me, MasterCard as well.
All right,
Since
I'll
they're
do
both
that too.
sisters.
Yeah, no worries. You had a buy, 1, 2, 3, support held. Did a series of rising 1, 2, 3 bottoms. 1, 2. You trailed your stops. Here, you trailed them again. Again, waiting for waiting time to trail them. Don't just trail them just because, oh, look at there's a little line. No, you have to wait to trail them, but you got a series of rising bottoms. Then have this top here. This, actually, I'm writing this one down too. This is a good example of an ascending triangle. Writing this down, ascending triangle. We're going to see what V looks like next week. Right now, you have a double top here. It's held resistance. It came down. This is the initial push. So 1, 2, we need it to break below here. However, we also have an ascending triangle. And without getting into all that, which we're going to wait for next week, we can draw the line and you can see it just to give you an idea. Okay, I can actually prefer to draw it on the daily. Let's draw it over here. You can see this line. Look at that. And you notice I'm not necessarily using all the bottoms. I use this one, I use that one, I let that one pierce through a little. I use this one and I use this one. This is a 45-degree ascending triangle. I am interested to see what will happen next week. Based on this pattern, this should break out and move significantly based on this pattern, if it holds true. So right now, yes, you have a overbought, but it's not a sell because you don't have price confirming the sell. In fact, if you know all the patterns, you have price telling you that more likely this is going to break out and break out large. So that's V. MasterCard. MasterCard does not look the same.
Interesting.
So, yeah, interesting, exactly. So MasterCard, I called it as a buy back down here. It spiked up. It did a gap, spiked up, came back down, and did another buy. So you have a double bottom with a, you have this. This is another way you get triple bottoms. I didn't really draw them, but I should draw them. So here. Triple bottom can often look like this. Let me draw it. Comes down, I'll draw rounded ones, and then looks like this. You have a bottom, and then this higher bottom. Okay, so that is what happened. Here, you have the bottom, a bottom, and then this higher bottom. And then it went into a channel. And it actually also went into a symmetrical triangle at the same time. You have a triangle here. I don't know if you can see it, but you have a triangle. And it broke out. And now it came back and retested, is what it's done. And retested the 21 daily EMA as well, which is what this was holding, kept on doing it. So it's not as nice looking as a Visa. Visa looks like it's really going to move, but right now MasterCard is holding the support. It broke down, but this is, yeah, it's holding the support. So if I can draw a trend line like this, right? See? And here is the symmetrical triangle. Man, this to me has just come so easily. I can see the channel's here, like just how it is, right? There's your symmetrical triangle, and it broke out of the symmetrical triangle. Now it's coming back to retest, which is similar to wedge, but it's different. So let's not get into it too much. But anyway, that's what's happened here. So as long as this support 21 and this line holds, it should bounce, move higher. It doesn't have the monster potential an ascending triangle is. So I mentioned earlier the number one pattern is the double head, double shoulder pattern. Number two is the wedge. Number 3 and 4 is the rectangle or the channel. Number 4 is an ascending triangle. Visa is an ascending triangle. These are the strongest patterns. Visa, you can see, this is a strong pattern that if it plays out, it moves. It's going to move quite a bit. Right? We'll talk about that next week, but MasterCard is not an ascending triangle. It's a symmetrical triangle. The daily shows it a little bit better. Symmetrical triangle breakout that came back and pulled back. And using this as an example, it really moved fast. So if you were not, let me just zoom in a little bit. If you were not quick on your feet, or say you work and you cannot be watching your computer screen every second, and you weren't watching MasterCard, chances are you missed this. Right? And you didn't even catch this pullback. So now you're presented the opportunity by waiting for the pullbacks to buy it here. And it held, and so in theory it should keep going. Come right back up. There's your opportunity. And that's why it's good to know these patterns and the fact that they tend to pull back. Any other symbols?
There's no other ones currently, so if you have anything else you want to talk about, then.
No. Other than, I would just say I'm intending to do these every Monday night. That's my intention. Next week, we know what the topic will be. We're going to be talking about continuation and trend breakouts, which is what a lot of the day traders use. The day traders are using that instead of reversals. I have been asked to discuss position management, money management, stop losses, all that kind of good stuff. So we'll do one on that. I don't know when, but maybe the following week. Yeah, so the intention is to do this every Monday. I don't know if I can, but we'll try. So I'm welcoming everyone to attend. I do need some sort of feedback, if at all possible. Can everyone see my screen? Like, does it look far away, or do I need to zoom in? That's one question I have. Two, is there anything about the format that, you know, is too boring, too whatever, that, you know, you're just dying now, you're just waiting for me to stop talking? That kind of thing. Like, is there, if you have any of that feedback, please provide it. You can do it now or you can do it later. I do have looks like 1,000 DMs. While I was talking, I got so many people sending messages. I'll get to those when I get to them. Sorry, I couldn't get to them. Other than that, I don't really have much. Not much. I'm hoping that everyone learned a lot. One of the key messages out of all of this is you don't need indicators. You just don't. Indicators are only there for you to give an idea if something is overbought and oversold. You do not ever, ever, ever buy something because some line goes above another line on an indicator. It's just silly. You have to wait for the price to go above something before you buy. You should not be buying because MACD crossed 0 or because RSI crossed the 50 or whatever. Stochastics crossed the 20 line. Shouldn't be buying that. Just as much as I don't buy math lines. Like if I was buying all my math lines with all these, you can see it with all these arrows, I'd be getting killed. Sometimes I'm right. Sometimes these arrows are bang on. I need to wait for price, right? So price is king. Price is what's deciding. So please remember that. Whatever you're trading, and I'm not putting down any specific indicator. I'm saying all of them need price before you use that indicator. Unless you're some other type. We talked about that at the beginning. If you're a momentum and news trader, you don't even need the chart. From fundamentals trader, you don't need the chart. Arbitrage trader, you don't use the chart. It's only these two guys. Day trading or swing trading, you're one of these two. Those are the ones using the charts. Should I even look at my DMs to see if there's questions?
Honestly, you've been going since 6, bro. I know you love teaching, but you should give yourself a break.
Yeah, I should get dinner.
You should get dinner, maybe like a glass of wine.
Maybe what's since 7? Yeah, so what is that? 4 hours, 19 minutes. Okay, well, I'm good. Unless there's any final questions, please send them right now in the next 30 seconds. Otherwise, we will have a good evening. And we'll talk to you on the chat. And we'll see you next week.
The only other questions I'm seeing are just chart requests, which are C and SoFi.
Okay. Don't know the symbol for SoFi, but I do know C. C, bottom 1, 2, 3, not very, didn't give you much time. Give you a little bit of time. Yeah, gave you a little bit of time. 1, 2, 3, break above 69, and it ran. It's still a buy. There's no sell signal. I believe the banks are raising their dividends after hours. I believe Morgan Stanley did it. Don't know who else raised it, but because of the liquidity is not as required as much, they're raising their dividends. So I expect to see the banks up tomorrow. So likely Citigroup will also be up with them. And like I said, it is a buy. There's no sell. So it's probably going to keep going. And if I was to guess, I would say right back up to $80. But we'll see. What was the other one? SoFi, Sci-Fi, whatever.
SoFi, SOFI.
I would say Sophie. I would say SoFi. Whatever. It's all good. SoFi, I don't know the company. You can see we had a bunch of overbought signals. It finally did a 1, 2, 3 top, declining top, kind of came down, didn't hold, came back up, did a triple. You can draw some lines, see a line there. You also can draw a line here. And this is why you also need to know the other patterns, because here you have an asymmetrical triangle that breaks down. You actually didn't have to wait for the 1, 2, 3 breakdown because it broke down the triangle. And that's why, well, I don't know what the news was today, but that's why this gap lower. Based on the chart only, this is why it's gap lower, because we have a triangle breakdown. Maybe there was news to justify it, but from a price chart pattern perspective, and we'll talk about these triangles next week, it's a breakdown of a triangle.
You killed it, man. I think you're good. It's just,
We're gonna go
but
to-
next time you got to go 15 minutes longer because Time Hawks was longer. So sorry about that.
Oh, that's okay.
Yeah.
His
Wasn't
was
enough.
much more his was more complicated than mine, believe me. So he deserves the extra time. Next Monday, again, we're going to go a continuation breakouts. So this is trend lines, this is triangles, this is flags. And we'll talk about wedges again. We'll talk about channels again a little bit. There's a few things we'll talk about again because they're both. But yeah, we'll go through all of that. That's what's on tap for next week. Okay.
This is for everyone. If we have the VOD saved on our Twitch stream, so if there are points you want to go over, you can just go over to the Twitch VOD and rewatch any points you want and in the same amount of speed you want. So go revisit it if you need some Big T knowledge.
Yeah, pause it anytime. It'll take you about 20 hours to watch it if you pause it, but sure.
And there's 2 times speed for a reason.
No worries. Okay, I'm going to mute and then I'm going to sign off. So everyone, have a good night. Thank you for joining. I appreciate it. You're too kind to listen to me for 4 hours, so I appreciate it. Thank you.
We can do a lot longer than that.
Oh, I'm sure there's 20,000 more symbols.
Yeah. We can just do the whole S&P 500.
Yeah, sure. While we're at it, why not?
All right.
There, did Moon leave? Moon?
Yeah, Moon said he was busy, so I was like, I can hop over and take care of it for you.
Okay, and thank you also to Young Bull Tommy, who had a lot of background noise, but I appreciate him streaming to Twitch and everything else. Thank you. He's still there, but he probably doesn't want to unmute. I don't know.
No, we don't want to hear static.
Yeah, we don't. want to
He
hit
said,
back
no
noise.
problem, Big T, I can't speak.
No, you can speak. Kitty? No, you get muted.
Yeah, Tommy, unmute. It's okay. Hurt our ears, unmute.
I can't unmute him. I'm not powerful enough. No problem. You in like a
Plane?
I don't know, a truck stop or something, or a plane? Yeah. Oh, I see. Okay, that's okay. It's all good. We're just teasing. Just teasing a little. Don't take me seriously.
Yeah, that AC better be God tier. All right, well, I'm gonna head out of here. Have a good evening, you guys, okay?
Yeah, everyone have a good evening, and I'm going on mute, and then I'm hanging up.
See
you
you
later.
everybody.